If you look at where yields are now and the yield curve is now, it suggests that we're going to see interest rates go down a lot because either we have a recession and everything craters and the Fed has to cut rates, or because inflation goes away. So you could argue that there's sort of a Jekyll and Hyde view in the markets these days, depending on, they're all doing the same thing, but for different reasons.
It's what we talked about with Liz McCormick yesterday, with the markets, sees and thinks, and we see it certainly in the Treasury trade and in the rates market, and then what the Fed keeps telling us. All right, Creedy, I am looking at the S&P 500, pretty broad-based, though, in terms of the buying. And once again, we, kind of continue to see investors willing to step up and buy in, certainly on the equity side of things.
Yeah, and that's been the real plot twist when it's come to what the markets can really expect, because once again, the first half of 2023 was supposed to be just another leg lower in the stock market.
I mean, look at the airlines. Look at American and their pre-announcement.
Yeah, and they are flying.
7 days in a row. I like that.
You're welcome.
7 days in a row for airline stocks higher. Longest winning streak since 2020.
Even after yesterday.
And they were up yesterday, even after the FAA thing. I don't know if you know anything about that, Creedy.
I've heard
She was at LaGuardia. She was at LaGuardia
But
all
look,
day.
American came in with amazing earnings this morning. They're having a major forecast upgrade. They are saying corporate travel's back. They're not super worried about inflation or recession. Their CEO actually said that. We're not worried about either. It's a pretty bold statement.
I can throw in that airline fares did go down in December, which contributed.
Not getting in the way of American.
Yeah.
I have an anecdote, if we have time.
Okay.
Again, just an anecdote. Demand destruction with airline prices. Friend wants to go to Puerto Rico for February break. He looked at airfare for his family of 4, be $1,200 a person. The hotel was a good deal. Flight's not a good deal. They're staying here.
I bet you could go to Cleveland cheaper.
You told me about supply and demand when it came to airline travel.
There's demand there. I want to know about Emily in Paris, though.
I know.
Oh, I recommend.
Everybody says don't watch it. It's terrible.
No.
And yet everybody keeps watching.
You just don't get it.
I read an article about it, too. They just slammed it, and then they're like, you kind of want to love to hate it, and then I love it.
I never seen
You watch it for the outfits.
Yeah.
Oh, well, that's why.
Come on, man.
And the cute dudes.
And
Can I
dudes.
say that, or am I going to get canceled? I'm probably going to get canceled.
All right, we got to wrap.
We got to wrap. Bloomberg Markets correspondent Creedy Gupta, Bloomberg News international economics and policy correspondent Michael McKee. Thank you so much, really, for that. We really appreciate that. All right, so we want to talk a little bit about another story that's certainly top of mind, and this has to do with Michael Novogratz.
Yeah, the first line of this story, Carol, I know you love it, I love it. Michael Novogratz wants to get something straight. It's not his fault you lost money on crypto.
I love this. He, of course, the founder of Galaxy Digital. It's down some $3 billion following the crypto winter that ultimately saw the implosion of FTX and more. Let's get to the story. Who wrote it? Bloomberg Wall Street reporter Sonali Basak, who is very busy, will be busy next week. She's in our studio, our Bloomberg Interactive Broker studio. What is this from Novogratz?
So I sat in his office in mid-December for about 2 hours.
Okay.
In the middle of last year. We got a tour of his office, and we talked a lot about his mood, and I asked him, on one hand, you're coming out of this cleaner than everybody else, right? You have lost money in some certain significant trades, like Luna, for example. He sold out early. He didn't get hurt as much as many other people did. And FTX as well. He had $77 million lost in that debacle because they were a counterparty, but he wasn't a VC investor. He sidestepped some trades. With that said, when all is said and done, he, on paper, lost more than $3 billion of his own wealth, but is still coming out with more than $1 billion left. And so he's, it's a very interesting time for him.
But he was such a fanboy. Is that fair to say?
Yeah, he got a tattoo.
I mean, come on.
We have to temper this so significantly because, and I've asked him this over and over and over. It's like you got that tattoo, you tweeted about it, but here's what it is. It's not just Novogratz. The responsibility of a whale on Wall Street, right? People say when they are buying, they don't say when they're selling.
No.
And when I asked about it, it's disclosed. It's disclosed in the filings. And it's like, well, the people that are following you on Twitter are going by your word there.
And the
They're
filings
not
lag,
looking,
right?
And the filings do lag. And so it is a very complicated discussion. And I think somewhere else you see this in the market as well. I've talked to a lot of people around him for this story, not just him.
Yeah.
His friends who are other billionaires in different industries, former investors, current investors. I've talked to his employees, current and former. And it's such a complicated story because you look at Sam Bankman-Fried now, for example, and he is blaming Binance for his fall because he said, Binance sold. If you're a whale and you say you're selling, you can crash a token too. So it's a complicated discussion, I think, at the end of the day.
You get what you get and you don't get upset.
It's a great story.
And you own up.
Yeah.
Shanali, a great story. Check it out. It's called Mike Novogratz Wants to Punch Disgraced Crypto Titans in the Face by Shanali Bassick. It's available online and on the Bloomberg terminal.
Fascinating story. So appreciate checking in with her. Shanali Bassick, as you said, Wall Street reporter at Bloomberg News. She's going to be busy next week and tomorrow breaking down those bank earnings. Carol Massar, Tim Stanovic, this is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We've been talking about it since 8:30 a.m. this morning. Retail inflation is decelerating, and that means the Fed is going to be able to slow down the pace of rate hikes. The overall consumer price index down in December by 0.1% from the prior month. Cheaper energy costs contributing to the first drop in 2.5 years. So if you look at retail inflation minus food and energy, the so-called core rate, it's up 5.7% from last year, the smallest advance in over 12 months. So that takes us to the Fed. What are they saying? Or it? Here is the head of the Philly Fed, Patrick Harker.
I expect that we're going to raise rates a few more times this year. Though, in my view, the days of us raising them 75 basis points at a time are surely past. In my view, hikes of 25 basis points will be appropriate going forward.
Okay, so I think we can agree now the Fed is moving in the direction of easier monetary policy, bringing it more in line with what the market has been telling us. And I think we also can say we're nearer to the end of that tightening campaign. Right now, Dow Industrial Average ahead 0.7%. We've got the S&P rising about 0.5%. NASDAQ comp picking up about 0.6%. Earnings tomorrow, the big banks are up. Today, we're talking about the airlines. American with the fourth quarter profit and revenue both exceeding forecast. American shares right now higher by more than 8.7%. We'll hear from Delta before the open tomorrow. Shares in Delta up about 3%. And if you look at the airline group, the sub-index within the S&P, higher right now by 4.4%. Long-term interest rates down today, 10-year off about 10 basis points to 3.44. That's helped to bring down the value of the dollar against the majors. The Bloomberg dollar spot off 0.9%. Look at this rally in the end, 129.40. We're up about 2.4% against the greenback. I'm Doug Krisner. That is your Bloomberg Business Flash.
Hey, Doug, it's the Fed calling. It says it has feelings. I'm just letting you know.
Are you correcting my grammar?
No, I would never. No, you got it right. I'm just telling you.
I had to revise that.
Pronouns are important.
Yeah,
Doug's going to
sometimes.
come up here, okay?
I'm going to turn this car around. I know what you're going to do.
He knows where you live, Carol.
All right, Doug Krisner, we'll come back to you in a little bit. All right, we talked earlier about today's CPI report. The U.S. is making progress, it seems, on inflation. It has also made progress on COVID, and yet we also talk a lot about how we're not completely over the pandemic, how a new Omicron subvariant is out, and that cases are once again rising around the United States.
Back with us for an update on the virus and where we are in the U.S. and around the world. We've got Dr. Amish Adalja, senior scholar and infectious disease physician at the Center for Health Security at the Bloomberg School of Public Health. It is, of course, supported by Michael R. Bloomberg, the founder of Bloomberg LP and Bloomberg Philanthropies. He joins us from Pittsburgh this afternoon. Dr. Adalja, it's good to talk with you again. It's been a while, which I guess is kind of good because, you know, it's not good when we were speaking with you every single week and the only thing we were talking about was COVID. But like you said, you know, over the last 2.5 years as we've been talking to you, this is a virus that's going to change. It's a virus that's here to stay. How are you looking at it being part of our lives right now?
I'm looking at it as something that we're going to continue to have to deal with, that people are going to have to continue to learn how to risk calculate with, and science and technology are going to continue to have to advance to give us new tools to be able to make it as manageable as possible. But I do think that it's going to be something that is always going to be generating new variants and headlines, but it's something that is now much like other respiratory viruses because of all of those tools that science and medicine have given us.
So, okay. I mean, it's interesting. Like, I think, first of all, I can't believe we're, 2 years out here now, 3 years out. So much has happened, so much in terms of how we think about these things and understanding that on a health basis, you know, the unthinkable can hit a developed and many developed nations like the U.S. and others. So way forward here, I think about this a lot, 5 shots in. I mean, do I just have to keep getting shots?
Well, I think that if you're somebody that's of average risk, that you don't have any high-risk conditions, that you're not older, you don't have cardiovascular disease, you don't have obesity, you're not pregnant, immunocompromised, the actual regular vaccine, the standard dose, does hold up really well against what matters, serious illness, hospitalization, and death. And boosting is really important for people that have risk factors for severe disease. I don't think that for the average healthy person, boosters do much. They don't cause harm, but they're not really going to give you much protection against infection because this virus has sort of evolved away from being able to be protected by our first generation vaccines. And I think it's really about protection against serious illness when it comes to vaccines and boosters. Maybe we'll get better vaccines that are more broad, that are not as susceptible to being kind of limited by variants. But right now with these first generation vaccines, it's really about protection against serious illness. And that's why I think boosters should be targeted to high risk individuals exclusively.
That's really surprising to hear from you. I mean, I thought the general guidance was everybody who's eligible should be getting a booster.
I've always been sort of a booster skeptic. I thought that when you look at what the vaccine was doing, it was protection against serious illness, hospitalization, and death. And so you have to actually have a baseline risk of that for the boosters to give you benefit. And what we see is the boosters don't really do so much, especially in the age of Omicron when it comes to protection against infection. What they really do is protect you against serious illness. So that's why I think it's really almost mandatory that if you're older and have or any high-risk condition, you should be boosted. And in fact, I think we have kind of this wrong situation in the United States where there are people who are at low risk who tend to be boosted to a very high degree, and then you look at the 300 to 400 people that die every day in the United States from COVID, and none of them are boosted. So I think that we diluted the message by pushing for universal boosting, and the people who actually needed to be boosted, who needed to hear that they should prioritize getting boosted, that really didn't reach them. And I think that's the problem. You know, we need nursing home residents to be boosted, not healthy 30-year-olds.
Is there a difference between the antibodies that are formed as a result of getting boosted versus the antibodies that are formed as a result of a prior infection?
Not really. They're in the same general category. There may be some tweaks depending upon which variant you are infected with, which booster you got, if you got the original booster or the bivalent booster, how strong they are. And there is some evidence that getting repeated boosters, you don't, even with the bivalent booster, you don't make different types of antibodies. You still continue to overwhelmingly make the antibody to the one virus that you first were exposed to, or the one type of spike protein you were first exposed to. That's something called imprinting, which is a little bit complicated. But in general, the bottom line with boosters is, yes, they're helpful, but it's really about protecting the high-risk populations with them, not necessarily the average risk person.
I think what's surprising to me is just the anecdotal, and it's so dangerous to use anecdotes when it comes to anything about medicine, because medicine is, when we get this stuff, it's approved, it's peer-reviewed, it follows the scientific method, and so on. But it's like, okay, my mother-in-law comes and stays with us. It turns out she had COVID the whole time, and the three of us don't end up getting COVID, and I kind of attribute to that to, well, okay, we previously had COVID,
right?
Or because we were recently vaccinated. I don't know, Dr. Adalja. It's like hard to explain this stuff that, you feel protected, but you don't necessarily feel protected.
Yeah, there's a lot of variables that really influence whether somebody gets infected. When was the person that you were exposed to? When were they contagious? What kind of immunity do you have? We know now that people who have hybrid immunity, a combination of being vaccinated plus natural infection, have the strongest type of immunity. How fresh was your last vaccine or booster or last infection? All of that plays a role in how likely somebody is to get infected, and there's a lot of variables that are at play. But this is a ubiquitous virus, and we're always going to be getting exposed to it. We're always going to know someone that has COVID. This is now part of kind of the infectious disease milieu that we all will face. All humans will face. For the foreseeable future on this planet.
All right, so if we are thinking about moving beyond this one, the coronavirus or COVID, is there another one that's likely to hit us probably in a few years or sooner? I mean, is that just kind of the fabric of our life now?
Well, not now. It's always been the fabric of our life. If you look at the history of the human species on this planet, it's been pandemic, epidemic, famine, infectious disease threat after infectious disease threat. It's only in the last 100 or so years where we've had somewhat of a respite because of sanitation, because of the development of vaccines, because of the development of antibiotics in modern medicine. But for our, if you talk to somebody, if you plot the whole human species time on this planet, almost just this little bit from around 1940 with infectious diseases. So, yeah.
Oh, I think we're having some problems with that cell phone.
We're going to try to get him back. We're speaking with Dr. Amish Adalja from the Johns Hopkins Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Dr. Adalja, senior scholar and infectious disease physician at the Center for Health Security at the Bloomberg School of Public Health.
I think really interesting. He's still with us. If you want to finish your thought in terms of, like, historically, you say this has always been a part of it, but it really, in modern times, it feels like it hasn't.
Right, I think, but only because we kind of had the luxury of vaccines and sanitation and antibiotics and antivirals. But if you look at the entire world, there were still tens of thousands of people dying from measles. Even in the United States, we have tens of thousands dying from influenza. I think that was kind of a false sense of security just based on the fact that people weren't paying attention to what was going on in the infectious disease world. So it's hard to predict when the next pandemic will be, but it's always not a question of whether one will occur. It's when it occurs. It's not if. And there are other viruses, other respiratory viruses, flu viruses particularly are top of the list, including avian flu viruses that I think we have to continue to prepare for.
Yeah, I've heard also just the general flu or the seasonal flu this time around has been really rough on a lot of people. Dr. Amish Adalja, thank you so much. Appreciate it. Senior scholar and infectious disease physician at the Center for Health Security at the Bloomberg School of Public Health, supported, as you know, by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies, joining us on the phone from Pittsburgh. I don't know about you. I mean, I'm going to probably still, if I can.
I was surprised to hear those comments about boosters that he made. But he's right that they need to get to the people who
really need it.
Yeah.
But I also am watching China because it's still a nation that's fighting it. All right, right now we do want to get a check on world and national news. For that, over to Nancy Lyons. She's in D.C. Hey, Nance.
Thanks, Carol. Attorney General Merrick Garland is appointing a special counsel to oversee the investigation into President Biden's handling of classified documents following his tenure as vice president. Robert Hur is taking on the role after serving as U.S. Attorney for the District of Maryland during the Trump administration.
I am confident that Mr. Hur will carry out his responsibility in an even-handed and urgent manner and in accordance with the highest traditions of this department.
Again, Attorney General Merrick Garland. President Biden addressed the ongoing investigation earlier today while hailing the latest inflation numbers.
People know I take classified documents and classified material seriously. I also said we're cooperating fully and completely with the Justice Department's review.
Biden did confirm more documents were found at his home in Delaware, in addition to those found at a think tank office. As for inflation, consumer prices moderated again last month, bolstering hopes inflation's grip on the economy will continue to ease and that the Fed may back off a little in controlling it. Jurors are hearing opening arguments today in the sedition trial of the far-right Proud Boys, 2 years after the attack on the U.S. Capitol. Prosecutors say Proud Boys leader, Enrique Tarrio, and 4 of his lieutenants were involved in a desperate plot to keep Joe Biden out of the White House. Defense attorneys deny there was a plot. The trial comes on the heels of the seditious conspiracy convictions of 2 leaders of the Oath Keepers, another far-right extremist group. The Arrival and Departure Board should be getting back to normal at the nation's airports, but the FAA is under new scrutiny after yesterday's safety systems outage. The agency is blaming a damaged database file for the meltdown. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So markets are reacting today to a deceleration, a cooling in the level of retail inflation. The overall consumer price index down in December by 0.1% compared to the prior month. This kind of suggests that the Fed is going to be able to slow down the pace of those rate hikes. We've heard today from a number of Fed speakers. The bottom line, the Fed moving in a direction of easier monetary policy and bringing the Fed more in line with what the market has been thinking. And we appear to be at the end of that tightening campaign. It's approaching, I think it's fair to say. Yields down across the curve with the 10-year off about 9 basis points at 345. In the equity market, the Dow higher by 0.8%, S&P better by about 0.6%, and the NASDAQ composite climbing 0.7%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, got it, Doug. Thank you so much. Well, the new issue of Bloomberg Business Week, it is out on newsstands, online at Bloomberg.com/businessweek, and of course, always on the Bloomberg terminal. It's the annual, the year ahead issue, the major trends, disruptions, breakthrough products, innovations, and movements to watch in the coming year. It complements this week's Bloomberg Live event in Davos. That's happening as the World Economic Forum hosts its annual meeting there. And the cover story has to do with the economic outlook.
It's written by Stephanie Flanders. She's Bloomberg News Senior Executive Editor for Economics and Government. She's here with us now in the Bloomberg Interactive Brokers studio. It's a real treat to have her on this side of the pond because she's usually, of course, based in our London office. Stephanie, how are you?
I'm all right. Looking at the year ahead.
Yeah, well, let's talk about the year ahead because you write about these three pillars that kind of held together the global economy. It was helpful to have low rates, but it was also helpful to have a kind of a conflict-free world, you know, notwithstanding some minor conflicts here and there. And then also, of course, energy prices were kept low for quite a while. If we look back on 2022, those pillars all kind of crumbled.
Yes, and that's what I was thinking. So what's useful about doing this exercise for Business Week, and I have done it a few years now, is you sort of, obviously you're quite caught up in, especially these days, on exactly what's going to happen to the economy this year, and are we going to get our heads around inflation? Is the Fed going to stop tightening? But you also want to step back and think, okay, how has the world fundamentally changed? And I think this was one of those years where I thought, wow, we really have had these fundamental assumptions underpinning maybe 30, 40 years of global economic history, certainly my lifetime of thinking about economics and thinking about the world, all having kind of been kicked away over the last couple of years. It's not just cheap energy prices, it's not just cheap labor costs and transportation costs, and as you said, the sort of friction-free period for geopolitics, at least when it came to, you know, am I going to find it fairly easy to set up a complicated supply chain in Asia or China? And all of that has gone away. And then on top of all that, you know, you kind of, every time that any one of those pillars was sort of shaky, you always had the Fed put, right? You always had the Fed there, super easy money, kind of free money to make everything still, make the numbers still add up. And when you start looking ahead and thinking, okay, if those have gone in quite a lasting way, decoupling, whatever you want to call it, as well as potentially kind of higher interest rates sticking around for a while, you know, that could mean something quite fundamental, not just for economic growth, but also for global politics.
You know, we talk about pivots, and I do think about, Stephanie, is it just a case of a reset, certainly here in the United States, but elsewhere, this whole idea of cheap money, no more.
Yeah, and I think, I mean, as you know, I'm normally in London, and the sheer pace of change there has been extraordinary. I mean,
right.
People, you know, the difference between getting a mortgage in July and getting it in September, partly thanks to the sort of craziness we had in Parliament, but actually not just that, you had rates double or treble in many cases. People are going to be going up in the next few months, renegotiating their mortgages and going from a 1% rate to 6%. And they're going to fail their affordability tests. And, you know, so, yeah, we don't know how that's going to play out.
Well, how do you think about this? Like this whole idea of the Fed still thinks they're going to get down to 2%, right, in terms of inflation. I mean, that's their target. There are many people say, no way, things have changed dramatically. How do you think about that globally? Like, is it different this time around? Is there kind of a new rate because of some global macro forces that have changed?
Connection lost.
Yeah, I think so. There's, as you know, a big debate about this, and there are plenty of economists on both sides, as always. So we can keep up the debate. Yeah. But I think I think this year, it's going to depend quite a lot on China. So you have the very rapid reopening actually may be unhelpful to the J-PALs of this world because, as you know, we could then see maybe an extra 1 percentage point, maybe an extra 2 percentage points on global inflation just because of faster China growth and higher energy prices from that. But looking further ahead, has there been a more fundamental shift between the relationship between unemployment and wages? You know, we've had all these years where you had super low unemployment, you know, very tight labor market, but wages didn't budge. Now, you know, the dam is kind of broken and you have got these much bigger wage rises coming down the track in many countries. If they get locked in, then you're right. You know, we're in a different world.
You write at the end of the piece that the microeconomic trend for 2023 is going to be nearshoring. The idea of untangling some of these supply chains that companies have spent a generation building as they've gotten concerned about, okay, maybe COVID-0 in China or trade relationships with countries, including China. How do you think that's going to continue to play out? Because at the same time, it does seem like labor is so, you know, you don't want to unravel too much, and a company like Apple, for example, is so inextricably bound to a country like China.
Well, I actually think that's one of the fundamental tensions, and it's why I've set up a whole squad. Now I've got control of the economics and government here at Bloomberg. We've got a geoeconomics squad, precisely because the economics and the politics is really kind of coming into tension at the moment. I don't think any of these big companies want a niche nearshore particularly. It wouldn't be their first choice. It wouldn't be their choice to come out of China, and they're resisting that in many areas. But they're also looking at the writing on the wall that as the geopolitical trends that we talked about from the last 30 years have gone into reverse. You know, the politicians, in a sense, are no longer on the side of closer and closer integration and globalization. So I think businesses, for the first time in a long time, have to reckon with, you know, if you like, the kind of the current of history running against them. You know, whereas previously, you know, in most places, people wanted to make things easier for global business. That's not the case now. You've got President Biden, you've got politicians all around the world actively making their lives harder.
It feels kind of glum in a lot of ways. No. You're not alone.
Like even the good news in China is bad news.
Right, exactly. And there was a lot of individuals say maybe it's not so great in the first half, better in the second half, but I think there's a lot of debate over that too. Could things actually come in better? Could the U.S. fare better too than the rest of the world or a lot of the world? Yeah,
and actually I even say that there. I think there's a scenario which says the U.S. dodges recession or has a very shallow recession. Even in the Eurozone, it's looking like, I don't think my optimism extends to the UK, alas, but in the Eurozone, it's looking like it's going to be a very shallow recession, and quite a lot of the countries may even dodge a formal recession. If we get to the end of the year and central banks have also have basically got control of inflation and that we are within sight of 2%, then, as I say at the end of the piece, everything does become a bit easier. You know, we may still have these structural trends, these question marks, but it's on a slower burn, and you're not talking about these relationships just kind of going up in smoke.
Stephanie, does it feel, since you've said you've done this a couple of times for Business Week, kind of setting what the economic outlook is for the year, how does it feel different from last year? Do you remember, does it feel more certain or still uncertain but different debates?
I think the fundamental sort of narratives are actually clearer, and actually going back to that point of geoeconomics, I sort of feel like I know what the story is or what the different elements of the story are going forward, but of course I never know what's going to happen, and that's what makes life so interesting.
Okay, 30 seconds just to end on Russia's invasion of Ukraine. I think it's been almost a full year at the end of February, and 30 seconds again, Stephanie. I mean, how does this play out in Europe?
I would say one positive. I mean, of course, it's a massively negative event for the continent to have a war on its shores. But the way that Europe has hung together, not just the governments, but the people, I think is a source of inspiration and potential optimism. We'll see whether they manage to carry that forward.
Well, it's a great setup for the year, which should turn out to be, it sounds like, another interesting one. Stephanie, thank you so much. Really appreciate it. Stephanie Flanders, of course, she's Senior Executive Editor for Economics and Government here at Bloomberg News. This is the cover story of the new issue of Bloomberg Business Week. It's the year ahead issue. You can find it on newsstands. You can find it online at bloomberg.com/businessweek. And, of course, always on the Bloomberg terminal. Right now, we're looking at an equity market just off its highs of the session. We're seeing the Dow really the outperformer, up about 0.75 percentage point. Carol Massar, Tim Stenovic. This is Bloomberg Business Week, live on YouTube, on Bloomberg Quick Take, and on Bloomberg Radio. This is Bloomberg.
It is now 2:53 on Wall Street. I'm Doug Krisner, Bloomberg World Headquarters in New York, with a look at some of these hour's top company headlines. We'll begin with the activist investor Nelson Peltz. He's nominated himself to the board at Disney, and his firm, Tryon Partners, today filed a preliminary proxy statement urging shareholders to support his nomination. Now, this will set the stage for what could become a highly public debate over the leadership of Disney CEO Bob Iger. American Airlines today saying that fourth quarter profit and revenue exceeded expectations, helped by robust holiday travel demand. Tomorrow, we will hear from Delta Airlines before the market opens. The market will be listening for updates on the early outlook for travel and fares in 2023, given stubbornly high cost for everything from labor to jet fuel. Shares in Cognizant are rallying. This is after the IT services company upwardly revised its revenue and profit forecast. Cognizant also naming Ravi Kumar, a veteran of Infosys, as its new CEO. T-Mobile US is considering an acquisition of Mint Mobile. The budget wireless provider is backed by actor Ryan Reynolds. We are told that no final decision has been made. And the Subway sandwich chain is said to be exploring a sale. It could attract private equity firms and value this closely held business at more than $10 billion. We are told plans are still in the early stages. Those are some of the company stories we're following. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
All right, everybody. You are listening and watching Bloomberg Business Week. Carol Master, Tim Stenovec on this Friday's Eve. Do you really not know who Blake Lively is?
I'm not a big celeb person. I got to get better on pop culture.
Should we kick him out, guys?
Yeah, kick me out.
Room? Should I kick him out?
I'm going to go ahead and Nancy Lyons is going to save me.
You've got all your...
Let's get to world and national news. Nancy Lyons is standing by at our 99 newsroom in D.C. Save me, Nance.
Okay, I'll save you, Tim. Attorney General Merrick Garland says it is in the public interest to appoint a special counsel to investigate whether President Biden mishandled classified information during his time in private life.
This appointment underscores for the public the department's commitment to both independence and accountability in particularly sensitive matters, and to making decisions indisputably guided only by the facts and the law.
Garland named Robert Hur to the position. He's a former U.S. attorney from Maryland. President Biden weighed in today ahead of Garland's announcement, confirming additional documents have been found at his Delaware home.
We're cooperating fully and completely with the Justice Department's review.
New House Speaker Kevin McCarthy says there also needs to be a congressional investigation of Biden's handling of classified documents. Well, House Republicans have wasted no time in tackling abortion. Bloomberg's Amy Morris reports on the first set of abortion-related bills.
One resolution condemns any violence to organizations that oppose abortions. Another lays out rules for doctors to treat children born after an attempted abortion. Doctors who perform abortions would be subject to criminal penalties. Neither bill is expected to reach President Biden's desk because they won't make it past the Democratic-controlled Senate. But Republican leaders have promised to pass abortion restrictions this Congress, introducing another bill that would ban abortions after a heartbeat is detected, usually around 6 weeks. In Washington, I'm Amy Morris, Bloomberg Radio.
A Brazilian art collector is alleging one of the 74 Van Gogh paintings on display at the Detroit Institute of the Arts was stolen from him. Gustavo Soter says the 1888 painting called Novel Reader was stolen after he bought it in 2017 for $3.7 million. He's been searching for it ever since. He says it's now worth $5 million. He wants the courts to force the museum to return it. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
All right, Nancy Lyons, thank you so much. Carol Master, Tim Stenovec in our Bloomberg Interactive Broker studio. I have to say, my husband and I were having a conversation kind of last night, and we're like, we're going to look at our streaming services. We have a lot.
You got to create a Google Doc and just figure out how much you're paying per month.
It's my new bundle.
That's so funny that you say that.
It's
because,
like crazy.
Yeah, I mean, I don't know if you guys have TV too, like traditional pay TV also.
We still do, but it doesn't cost much, I think, because our internet service or whatever the heck that is.
They tried to bundle these things. They tried to bundle these things a few years ago when, AT&T owned the content. You know, if you had an AT&T subscription, you could have HBO and some other, I don't even remember what they were because it's changed so much. But they've kind of gotten unbundled again, and now we're seeing them go up in price.
Ka-ching, ka-ching. HBO Max, speaking of going up in price, HBO introducing its first price increase since the service was launched nearly 3 years ago. Latest sign that the grow-at-all-costs era of the streaming business is ending. So HBO Max, no commercials, will rise about almost 7% to $15.99 a month from $14.99 starting today.
That's higher than inflation.
Starting today? I'm assuming starting Thursday. Yeah.
Okay.
Yeah. It's a little bit more costly than Netflix's standard $15.49 a month plan. Both companies now offer cheaper ad-supported tiers. How do you feel about ads? I'm like, I don't know how I feel.
No, I can't stand them.
Really?
Like, yeah, I will pay the double price to get rid of the ads.
Yeah, we've kind of done that too. All right, well, to be continued.
They spoiled us back in the day without ads.
The new bundling. Yeah. I know. They lured us in.
They did.
All right, guys, we're watching the market. Stocks just coming off their highs of the session. We're going to head over to our TV colleagues, talk about the internals, Bloomberg's countdown to the close. It starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go here in the trading session. Romaine Bostic alongside Katie Greifeld. We're joined right now by our colleagues Carol Massar and Tim Stenovic. Welcome to our audiences across Bloomberg Television, radio, Quick Take, as well as on YouTube. Most people, Carol, they came in today expecting a little bit of a softer inflation, and they got it.
Yeah, absolutely. Kind of smack on what economists were expecting, at least in terms of the medium forecast. It's kind of interesting, though, in terms of the equity trade, right? We saw some selling early on, a bounce off. One of the things that I've been looking at is what's going on with bank stocks. I'm thinking now, all right, got the CPI print, moving on to the next thing, and that's the bank stocks and the earnings. Bank stocks, if you look at the KBW Bank Index, outperforming the broader market today. It's up about 0.8%. Some of the names within that, JP Morgan's up about 0.4. You got B of A up about 0.2%. Citi is up more than 1%. Keep in mind that bank stocks are coming off their worst year since 2011. They were down 24%, underperforming the broader market last year. So Bloomberg reporting these U.S. bank shares have rarely been cheaper as the group kicks off earnings. So I'm just thinking, depending on what we get, we could see some outperformance in these names or maybe underperformance tomorrow.
Okay, well, speaking of outperformance, airlines have been on a tear this year. The S&P 500 Super Composite Airlines Index, we're looking at it right here on the screen. It's up 4.2% today, Romaine. Up for the 7th day in a row. Helping it a lot today were those American Airlines preliminary numbers that said fourth quarter profit is going to almost double the expectations of industry analysts, revenue also exceeding their projections. For the holidays, we got out there, we flew.
Yeah, we certainly did here, and I think overall you put the net effect of all this together here, and that's really a market that now seems to believe that the worst-case scenario is behind us. An S&P 500 that flirted with 4,000 on the day, but probably more importantly, an S&P 500 that right now, at this moment, at 39.85, is about a point or two above its 200-day moving average. Whether it closes above that and whether it holds that for more than a day or two remains to be seen here, but a lot of folks eyeing that as a key test, a key retest, to be specific, of a key technical level.
And with us on 4,000 watch, let's look at the sectors. It's mostly green, 8 sectors higher right now out of 11. You have technology leading the way up 0.6%. Energy, too, having a good day, as is communication services. What's not doing super hot right now, you have healthcare at the bottom, down 0.4%. Also, staples down off by about 0.6%.
Yeah, we talk about some of the individual movers. All the talk today, of course, about Disney. Those shares are higher, up about 4% here on the day, right around $100 a share, as we're learning that there now potentially is a proxy fight being set up between Disney, the Disney's board, and Nelson Peltz and Trian Partners. Something to keep an eye on there, as a lot of investors, including Dan Loeb and a few others, really trying to right that ship. Cinemark Holdings up about 8% here on the day on stronger than expected box office results over the last few weeks. Analysts upgrading that stock. KB Home lower here on the day, down by about 2.5% here. And anything related to AI seems to be getting a bid here. Big Bear AI Holdings right now is up about 241% here. Remember, this is a relative micro-cap company. It came to the market via a SPAC a couple of years ago and then proceeded to plunge like 90-something% here. But they just got a big U.S. Air Force contract for about $900 million. And a lot of focus right now on the technology that they have and whether that's going to be the next big thing. guys. We got to go, of course, go back to what started the day, and of course that was the CPI report. And well, to paraphrase the late great Stuart Scott, inflation cool, like the other side of the pillow there. Core inflation up about 0.3%, excuse me. That was in line with expectations. Year-over-year number at 5.7%. And you actually had a negative sign on that month-to-month number on a headline basis here, adding, guys, to a lot more evidence here that, yes, inflation is trending down.
I thought you were going to say transitory for a second.
No, gosh.
Okay.
Even so, Fed speakers out there, and Jim Bullard among them, who has been right in being concerned about inflation very early on when you think about the Fed members. He wants to get those rates to 5% as soon as possible and then keep them there. He is the president of the St. Louis Fed, and here's what he had to say. He was at a virtual event out in Wisconsin. Check it out.
We don't want to replay the 1970s. We want to make sure that we're moving inflation clearly back to 2%. And that means that the Fed is going to have to maintain rates at high enough levels to make sure that inflation is moving down.
And that, of course, is Jim Bullard, president of the St. Louis Fed. He's not a voting member, but Patrick Harper of the Philly Fed is. He was also out with some comments. He said the same thing. Let's get to that 5%. How far above? He says, you know, we'll kind of let the data play out. But he says we don't think we need to go much further than 5% at this point. Let's sit then, because he doesn't want the Fed to do any kind of undue harm to the labor market. So I thought that was some interesting color.
But how do you square that, though? Because, I mean, in theory, I mean, to get to where they are, you basically need 75 more basis points.
Yeah.
But then Harker's saying, well, we only need to maybe do 25 at the next meeting here. So is the idea is that they basically just do smaller incremental moves but keep doing it? Or do you just go for it, go do another 50, 75, and then pause?
I think you go smaller. I think you have to be careful at this point. We know that this is not an exact science at this point. And, you know, if the Fed can do it, this is their goal, right? Can they do, Tim, that soft landing?
Well, that's certainly the question. And I think a big question also remains is how long the Fed keeps rates above 5%. Because just because inflation, you know, has been trending downward for 6 months at this point, and, you know, people are certainly happy about that, doesn't mean that if we and when we do reach 2% rate, that the Fed's going to drop rates and go back to this easy monetary policy that people have been used to, for 12 years at this point.
I like that we're talking about the terminal rate, because I think that that's the smart conversation to have. But it seems like markets aren't necessarily picking that apart right now. They're just focused on what's going to happen in February, 50 or 25, maybe a little bit of focus on March. But it seems like, especially when you think about the comments we got from Harker, that we got from Susan Collins yesterday, 25 basis points next month is almost a lock.
What do you expect here out of the earnings season, and more importantly, the commentary here? Because if we get through this earnings season and you don't necessarily get the major downward revisions in outlooks and forecasts and whatnot, and you start to hear from CEOs and CFOs who say that they're optimistic here, does that then underpin sentiment here? Because that seems to be the final leg of this. If the companies think they're okay, then why wouldn't the market?
Yes, yes, yes. I would say absolutely. That commentary that we're going to get from the all of the earnings, the CEOs, starting with the big bank guys. I mean, I think this is crucial in terms of market sentiment, and we'll see how much this starts to shift the market again. I mean, look at where yields have moved to today.
Yeah, well, important also in earnings season, you think about the expectations, even though maybe the estimates didn't come down as quickly as people said they should have, it seems like the outlook is pretty dire at that point. You have to wonder, does that create a really low bar for some of these companies?
Well, over the past couple of weeks, we got some pre-announcements of companies coming out and saying that it wasn't going to look good. And then on a day like today, you get American Airlines coming out and saying, hey, it's not just companies pre-announcing bad results. We're actually pre-announcing because our results are going to exceed expectations when we announce later this month.
And if you do buy into the idea that the worst case scenario is over, maybe that is an explanation of why you are seeing so much of a pile in to some of those really beaten down stocks. We were looking at Carvana earlier today, up about 35, 36%. That compares to the 35, 36% that it rose yesterday. So a lot of people think some of these companies could avert some of the worst case scenario, even Bitcoin. I mean, you guys used to have a Bitcoin show, and then I guess they canceled it after the collapse. But even that's like up around like what, back to 19,000 or something? Close?
Yeah, Romaine,
yeah.
Save it. We're going to have more in less than an hour's time. We'll continue this conversation. Radio, TV, YouTube. This will give Katie and Tim some time to come back about that crypto
Yeah, I got to
show.
think about my response to that, Romaine.
Beyond the Bell at 4 p.m. We're going to count you down to the close on this Thursday. All right, you definitely know the sounds, what that means. That's the Walt Disney Company, right? And shares of Disney, they're up again. They're now up about 14% this year. Last night, a flurry of headlines as the company squares off against activist investor Nelson Peltz, who nominated himself to the board. What happens, though, now is the responsibility of longtime CEO Bob Iger, who, as you all know, he retired. Then he came back to run the company late last year. So there's a lot going on here.
Yeah, we've got a great group of voices with us this afternoon. We've got Bloomberg News Entertainment editor Chris Palmieri, who's on the phone from LA. He's going to give us the news. And then we get some more analysis from Bloomberg Intelligence Technology and media analyst Geeta Ranganathan, who's with us via Zoom from our Bloomberg Intelligence headquarters in Princeton, New Jersey. Chris, I want to start with you because I made this comment to Carol earlier today. Bob Iger, the return of the Bob, he has not wasted any time in undoing some of the changes that his predecessor and successor, I don't know if there's a word for predecessor and successor, Bob Chapek made, starting with some rules at the parks, some rules at corporate HQ, and then also squaring off with Peltz. Bring us the latest.
Right, yeah. So right off the bat, he indicated he was going to do away with this sort of controversial distribution arm of Disney that sort of made decisions about where all the movies and TV shows go, and sort of wrangled a lot of staff internally. He hasn't really come up with that new plan yet, but he's indicated that's on the way out the door. This week also, as you noted, changes to the parks. Under Chapek, who was known for squeezing every dollar they could out of park guests, and now Iger is offering things like some free photo passes this year and other things to sort of win them back a bit. And now, yes, going to war with Nelson Peltz, one of the most formidable corporate activists, been doing this for decades, taking on big companies, Procter & Gamble, Heinz, and Disney's board saying, no thanks, Nelson, we'd rather not have you on it. So a proxy war, shaping up over the next few weeks.
All right, Geeta, come on in on it. What's wrong with Disney?
Too many things, unfortunately, Carol. So this whole timing by Peltz seems to be very, very smart. Obviously, I think Disney is in a lot of turmoil right now. We had a dismal, earnings report when they reported in November. We saw streaming losses kind of balloon to about $1.5 billion for just that quarter. And if you kind of look at Peltz's slide presentation, which he calls "Restore the Magic," he says
he's
that
even
by
got a website, Geeta.
Yeah, he's got a website. Yes, Restore the Magic is the name of that website, and he basically says that streaming losses are huge. They are going to reach $15 billion by 2024, which we kind of agree with. So all of those things, and then of course you had that huge management upheaval with the ouster of Chapek, the reinstatement of Bob Iger. So obviously the timing is kind of very astute on the part of Peltz. But having said that, I mean, a lot of the critiques that he has leveled against Disney and the board and the management, I mean, these were all already on the radar. And Bob Iger, as Chris pointed out, is already working on these. So, yes, he's given all of these. He's given this laundry list of items to do, but he hasn't necessarily given us a plan.
Well, I guess that brings me to my next question for Chris, which is, when we think about a succession plan here or any sort of plan, Iger had 15 years to make his plan at Disney when he led it from 2005 to 2020, Chris, and then he handpicked Bob Chapek. So his next step is figuring out not only what to do in terms of strategy, but also who's going to take the helm.
Right, and they've made proactively some announcements along that route. When they rehired Iger, they said you've got 2 years, and one of your main missions is going to be, groom that replacement. As part of this week's news, they announced the retirement of their current chairman of the board, replacing her with Mark Palmer, Nike's former executive, and he is now heading a specific subset of the board that's going to be tasked with finding that replacement. I mean, this is certainly one of the things that, Iger is well respected in the industry, but there's no corporate governance expert, no analyst who really believes that this succession plan worked very well. And so this is definitely a weak point from him. something you can expect Nelson Peltz to hammer away at.
You know, Chris, I'm listening to you, and I think about, years ago, right? And we did a deep dive into Disney, and it was Tom Staggs, and I can't remember, Rizzullo, right? The CFO, where they switched places, and these are the two guys that were said to be, kind of getting different perspectives of the company, and one of them was going to maybe, possibly, likely take over for Iger, and then it didn't happen. So, is Bob okay about handing over the mantle?
That depends who you ask. There's certainly a school of thought that says he's not a guy, and historically, by the way, Disney CEOs have had a hard time giving up the job.
Fair.
You remember Michael Eisner. So, he stayed, renewed his contract 4 times, at least 5 now, if you count this one. He is one who very much wanted to stay in that role.
Geeta, what's your thoughts in terms of Bob Iger back at the helm? Is this exactly what the company needs to kind of set it straight? And then ultimately, do you think he'll be comfortable in 2 years' time handing over the top spot?
Yeah, that's a loaded question, Carol. So, I think he is absolutely the best person to lead the company right now. He knows what needs to be done. He's very, very familiar with all of the assets, all of the IP. He clearly understands that some of the content, especially the animated content, has been underperforming. So there is a clear task on hand for Bob Iger. So I'm sure he knows exactly what he's doing. Now the question comes to succession, and this has been botched by Iger. I mean, for all the successes that he's had, this is one consistent area where he has failed, and it's going to be interesting to see because it really ultimately I think comes down to creative expertise, and this is something what all the other prior candidates I think have collectively lacked, right? Whether it was a Tom Staggs or whether it was a Jay Rizzullo, and even Tom Chapek. He was a Parks guy, so it kind of that whole creative process, managing talent. That is something that only very few people can do, and so it's going to be interesting to see if they can really find somebody within 2 years. My suspicion is, this is again going to be a deja vu situation because yes, he's invigorating the content right now. He's rejiggering the whole creative process, but I don't think 2 years is going to be enough for him to really complete what he starts.
So if he's doing really well, Geeta, is it possible that he sticks around?
I think so. Yes.
Yeah. Okay.
Yeah.
He's got to update that autobiography that he released a couple of years ago, I think. Hey, Geeta, in terms of names, is there any chance that Disney would go outside of the company to find someone?
I definitely think that's possible. There are a few names that, keep coming up internally. Obviously Christine McCarthy, she's the CFO. She has a lot of experience. But again, if they're really looking for somebody with that creative kind of genius, I don't know if she necessarily fits the bill. Of course, you have Dana Walden, who comes from Fox, who probably, does have a lot of creative expertise. She's, kind of managed the TV and the entertainment business. But I wouldn't be surprised if they look outside as well. And again, here also, a very interesting point by Peltz about why they would have chosen, Bob Chapek and not Kevin Mayer. And that's something that we were all kind of scratching our...
And Mayer's Kevin Mayer's long gone at this point.
He is, yes. He's doing his own thing now, but... that was a big shock, actually, a big surprise when that whole announcement came out. Just kind of given his involvement in the whole streaming initiative, just kind of given his whole expertise with content. Yeah.
What about the hey Chris? What about the Marvel head? Kevin Feige. Is that a possibility?
Yeah, I don't think so. Kevin is without a doubt the most successful producer in the history of Hollywood, and so. He's had plenty of opportunities if he wanted to rise within the organization or go to another studio. I think he's very content running Marvel, and probably it would arguably doesn't have the broader experience it would take to run the Walt Disney Company.
Well, it's an incredible company. When we talk about, a world where content matters, this is a company that has so much and is so good about kind of mixing it across the platform. So it will be interesting to see.
One that's reinvented itself
Bob
many
does.
times over a century.
Yeah, absolutely. So we'll keep an eye on it. I know so will our team. Chris, thank you. Chris Palmieri, entertainment editor at Bloomberg News, on the phone from LA. And always our thanks to Geeta Ranganathan. She's technology and media analyst with our Bloomberg Intelligence team from our BI headquarters in Princeton.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds that small businesses impacted by the COVID-19 pandemic may qualify for the Employee Retention Credit. Let Innovation Refunds do the work to find out how and if your organization qualifies for EREC assistance. They've already helped businesses claim over $2 billion in payroll tax refunds. You can learn more at getrefunds.com. We're seeing a positive tone in markets today, given that deceleration in retail inflation. Let's check on the latest price action as we cross to the Bloomberg Macro Squawk Desk and Bailey Lipschultz. Hey, Bailey.
Yeah, good afternoon, Doug. Stocks are holding on to gains in what's become a choppy session after inflation data showed further signs of easing. The Dow was up 180 points, S&P higher by 10, with the Nasdaq gaining 40 points. The U.S. 10-year yield is at 3.45%, and small caps are higher by 15. 8 of the 11 main S&P sectors are trading higher, led by gains in energy and real estate, while consumer staples and healthcare are the worst performers. Nasdaq biotechs are up 30, transports rise 80 points, semis climb 35, while the VIX is lower by 9.5%. Leaders in the Dow, Disney, Boeing, and Salesforce, while Coca-Cola, Amgen, and Walmart are the worst performers. On the earnings front, KB Home slumped after new order sales fell in the fourth quarter, and airlines rallied after American Air said quarterly profit will almost double analyst expectations. In other news, Big Bear AI surged 250% after a $900 million contract with the U.S. Air Force. And wrapping things up, Bitcoin jumped 7% to trade near $19,000 for the first time since November. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Doug?
All right, Bailey, thank you. And if you have a Bloomberg terminal and you want to get to live audio updates using it, the function is SQUA. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. Well, Elon Musk, used to being in the driver's seat or seats, considering all that he's involved in. Sometimes that even means driving some Twitter founders to a competing social network. It's kind of like, wait, what are you doing?
This is really interesting. With
Right?
who and where they're going and the latest on the Twitter situation. Here with us is a Bloomberg News technology reporter, Alex Branca. She joins us on camera from our LA bureau. Alex, good to have you back with us. Mastodon. What is going on with Mastodon?
And if you haven't heard of Mastodon, I'll also kind of just explain it to you. It's this kind of new-ish social network that a lot of folks who perhaps are unhappy with Twitter or who are looking for a different platform to share news or short bursts of information have been migrating to Mastodon. Now, Mastodon started as kind of a techie community. They call their kind of groups servers or instances. Initially, it was a lot of folks who were kind of deep in tech, but they've started to attract a general audience, including a couple of really notable names like Twitter co-founders Biz Stone and Ev Williams, who have now moved on the platform and said they are tinkering and trying it out.
A big complaint that I've heard about Mastodon, and full disclosure, I have not tried it. I've tried Post. I'm on Post News, but I haven't signed in 2 weeks. This is what happens, by the way, with competing social networks. Is that it's complicated. That Mastodon is it's kind of tough to find servers. What has your experience been based on what you've done and also the people you've spoken to? And, someone on Twitter compared it to using Linux as an operating system.
It sort of is. It is. It's open source software that has these communities on it. I've gotten on it, and I'll tell you, I had the same experience. It's kind of gorpy. It's kind of tricky. I don't quite know how to use it. I only have a whopping 3 followers there versus, almost 8,000 on Twitter. So there's a lot of differences. I also don't think, frankly, if I were to go to my non-tech friends and say, hey, try this thing, they wouldn't know how to sign up either. So I think that's one of the hills to climb for Mastodon, and also probably why they're excited to be kind of connected with Ev Williams, that Twitter co-founder in particular. You'll remember Ev also founded a blogging platform called Medium. And in this kind of shift over to Mastodon, Medium has set up its own instance, its own server or community, where it's going to set its own rules and encourage its authors to go over there and perhaps bring some of their users. As of recently, even after this rush of new users, Mastodon has said that they have about 2.5 million people using the platform. Compare that to the around 230 million daily active users that Twitter has. So a bit more tricky. It's not as user-friendly, and they don't have the user base, but it's really interesting that some of the moves that Twitter's making is forcing some people to even jump onto a platform that has a few more hurdles than something like Twitter might.
Alex, it makes me think, okay, if somebody can set something up that can really challenge Twitter, you could quickly see people move to it. At the same time, it made me think, what Twitter's power is? they've got so many people already in that universe. And that's where, you know, the tricky wick is, what does Elon do with it, and to keep those people there?
Yeah, absolutely. You've seen some changes in recent days. Right now, your feed is now split. There's your following feed, which is like the old school Twitter feed of the folks that you've chosen to follow. And I also have something called my For You feed now, which for folks who watch the social media industry, that seems to be lifted from TikTok, who has an algorithmically kind of driven For You feed.
This is on Twitter?
That is interesting too. On Twitter. My Twitter currently has a For You and it has a following.
Is
and
the For You, are the For You people interspersed within your timeline? Like, I've noticed my timeline is full of people I don't follow. Is that what you mean?
That's what I mean. It's full of people I don't follow, and I'm seeing things like tweets from 2 days ago. I'm seeing things like tweets about topics that I haven't historically kind of engaged with. So this could be a play from Twitter to try to drive engagement, to kind of lift some of the tactics that TikTok's using, that Instagram has borrowed from TikTok, of introducing you to new kind of interest areas or new people to get you more engaged on the platform. Whether or not that bears out in more engagement and more users and more advertiser interest, that will be kind of a to be determined. But it does seem like as folks like Mastodon and even, you know, Instagram, TikTok, LinkedIn start to take some of the typical users away from Twitter, it seems like they have to try some new things.
Why doesn't Facebook just do this? Facebook has the people, right? You know, there's so many people who are on Facebook and Instagram. Why don't they try to sort of, I don't know, become a place where for people who are disenfranchised or feel disenfranchised by Twitter?
Because they're building the metaverse. Come on, Tim, did you not get the metaverse?
I'm asking Alex, okay, Carol?
I mean,
that might be the answer.
they're building the metaverse, but they're also...
Carol was right.
It's part of it, but they're also investing a lot in AI that's not only applicable to photos and videos, but also to text. So it seems like whether you're interested in something, that could be a place to go. But for someone like me in the journalism industry, for folks who care about finance news, for folks who are, you know, a lot of the news sources, Twitter's kind of been the space for that. Facebook, on the other hand, has gotten into a lot of trouble for its dealings in misinformation. That's been a bit of a debate now on Twitter. But when you think about like why you go to certain platforms, Facebook seems to be, Meta with Facebook and Instagram, moving in a little bit of a different direction than where Twitter has historically been, as a kind of de facto place of news, political conversation, and conversation around live events like the Super Bowl or a major sports event.
All right, Alex, so net, does Elon need to be worried about Mastodon?
I think right now the users don't give him any worry, but in the future, if folks continue flocking there, then, you know, I think he has a lot of worries on his table, and this might be another one.
All right. While we're talking about worries, what about Twitter employees? You know, there's another story on the terminal. It talks about workers at Twitter's Singapore office told to empty out their desks, vacate the premises, according to those familiar, as Elon Musk continues to pare expenses around the globe. All right, so that's like go work from home, but you do wonder, okay, do that, and then maybe what's the next step? But anyway, I'm just reading into this, maybe incorrectly, but how do you see it?
Yeah, so this is kind of one of the moves that we're seeing happen under Musk, where costs are being cut. Basically, the offices, the leases are expiring. They need to kind of figure out another plan. Twitter employees have had a lot of whiplash lately, and it seems like there's been kind of a months-long refocusing on things. So whether you're working from home and that's kind of changing your day-to-day, whether it's you know, changing the feed like we've seen, whether it's trying to roll out new kind of valuable offerings to advertisers, a lot of which have left or paused spending on the platform. The Twitter employees that are left are not only doing their jobs, but also having to deal with a little bit of the chaos that we've seen over the last few months. So Singapore is one of the offices. We'll see if they continue to kind of shrink their footprint and shift to a kind of grand work from home model, which Elon has also said he is not interested in. So I think the read through is the chaos or the whiplash seems to kind of continue for folks both on the platform and those behind the scenes who are keeping the lights on.
Is it just me, Alex, or has Elon Musk kind of toned it down a bit on Twitter over the last couple of weeks?
He's been a little quieter. I don't know if that's the holidays or if that's the New Year rush or if they're annual planning, but it does seem like the drama has calmed down. But you remember, there's some big beats still to come, right? He said they're looking for a new CEO to take over a lot of the operations. He's got a big debt bill due in January. So I think we'll still have enough drama and fodder to talk about, even if he's not taking it to Twitter himself.
Listen, he told us, what, 14 hours ago, maybe we should spend less time on social media. I I mean, come on, he's got other things to
I'm
do.
going to take
He's
that advice.
down. Oh my God, it's going to be an interesting year. Alex Barinka, thank you as always. We're getting a double dose of Alex this week, and really good to check in with her. Twitter, yeah, we'll see.
We'll see. You going to try Mastodon?
No.
There's also Post News, which
Say what?
Post News.
Are you on it?
I'm on that, but I haven't been.
Do you use it?
No, I haven't been. I got to get
This
back
is the
on
guy who like deletes Twitter and then puts it back on?
Yeah, it's just I'm an addict.
No
It's
offense.
bad.
I loved him, but I don't know that I'm going to follow.
Well, you follow me on Twitter.
I follow you on Twitter, but I don't know if I'm going to follow what you do here.
Thanks. Hey, thanks, co-anchor Carol. That's nice.
Heart, love.
Okay.
All right. Again, our thanks to Alex Barinka. Right now, let's send it out to Nancy Lyon. She's going to check update on world and national news. She's in D.C. Hey, Nance.
Thanks, Carol. Attorney General Merrick Garland says he has signed an order appointing Robert Hur as special counsel to look into the handling of classified documents by President Biden.
The document authorizes him to investigate whether any person or entity violated the law in connection with this matter. The special counsel will not be subject to the day-to-day supervision of any official of the department, but he must comply with the regulations, procedures, and policies of the department.
Garland says it was in the public interest to appoint the special counsel. Inflation is cooling off a bit. The consumer price index went down by 0.1% in December, exactly as economists had predicted. President Biden cheered the news at the White House.
The data is clear. Even though inflation is high in major economies around the world, it's coming down in America month after month, giving families some real breathing room.
A big decline in gas prices contributed to the drop. Sam Bankman-Fried is giving one of his most detailed descriptions yet of the collapse of FTX. Bloomberg's Nathan Hager has more from Washington.
In a blog post today, the former crypto magnate said he did not steal funds and didn't stash billions away. Bankman-Fried is blaming crashing markets and an attack from a rival for his exchange's eventual bankruptcy. The 30-year-old is out on bail and wearing an electronic monitoring bracelet while he awaits trial in October on multiple counts of fraud and campaign finance violations tied to the collapse of FTX. In Washington, I'm Nathan Hager, Bloomberg Radio.
Even after weeks of incessant and flooding rain, the historic drought gripping California has barely begun to recede. Just over 95% of the state remains in drought, down from about 98% the week before. The recent storms have killed at least 17 people. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Prices are trading at higher levels right now, with the Dow Industrial Average up about 0.6%, the S&P better by 0.3%, and the Nasdaq Composite climbing by about 0.5%. So the market remains positive, a bit off the best level of the day. The key driver in the price action has been the report on December consumer prices. We saw a deceleration in the level of retail inflation, with CPI dropping 0.1%. That's pretty much in line with expectations. If you look at the so-called core rate, so this is the cost of living minus food and energy, an extension of, or an increase, I should say, at a rate of 5.7% from last year. But that is the smallest advance we've seen in about 12 months. Now, today we've heard from a number of Fed speakers. Bottom line here, the Fed is moving in the direction of easier monetary policy, bringing the Fed more in line with what the market has been saying. Tomorrow, the focus is going to shift to earnings from the big banks, including J.P. Morgan and Citi. Today, we heard from American Airlines. The stock is rallying right now after the carrier said fourth quarter profit and revenue exceeded forecast. American shares up nearly 10% right now. Google and NVIDIA have expressed concern to the FTC about Microsoft's acquisition of Activision Blizzard. We are told the companies joined Sony in raising many issues about this transaction. I'm Doug Krisner. That is your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got about 18 minutes left in the Thursday trading session, getting ready to wrap that up. Stocks, you just heard the numbers and the overall market numbers from Doug, but stocks coming off their highs of the session. So let's see what our next guest has to say about the outlook.
Very pleased to have with us this afternoon Chris Igo, CIO at the asset manager AXA Investment Managers, with us via Zoom from London. Chris, how are you?
I'm very well, thanks. Thanks for having me.
Well, thanks so much for joining us. Really appreciate it. So the CPI report here in the U.S. has come and gone, and it really just hit expectations. My feeling is that investors were kind of pricing in something even softer, Carol.
Yeah, I think so, or hopeful.
Yeah, they were hopeful about that. What do you make of it, Chris?
Yeah, I mean, I think that there was the expectation it could have come in lower, but I think the trend is very encouraging. We had all the nasty surprises in the middle of last year, and the last few months, the numbers have come in line with what economists have forecast. So that's encouraging, and it suggests that inflation is going to gradually ease as we go through 2023.
Hey, Chris, one thing I do wonder, bonds have definitely gotten more competitive when it comes to the equity side of things. If you look at, what we're seeing in terms of yields versus what you yield on the S&P 500, how do you think about bond stock? Let's go basic, bond stock allocations. How do they compare?
Well, I think bonds are back. I mean, we've got yields now which are attractive, and for many years they weren't. So I think investors who are managing or running multi-asset portfolios can really see a more interesting role for bonds this year. You're getting higher yield for the same amount of duration or credit risk. And at a time when the outlook for equities is still somewhat uncertain, because we're just about to head into earnings season, most of the forecasts are for a modest recession in the US this year. I think bonds give that certainty of return, which we haven't had for some time.
Having said that, we just talked with our Stephanie Flanders. The year ahead issue of Bloomberg Business Week is out, and she really, sets the tone in terms of talking about the global economic outlook for 2023 and how it too could hold some surprises. 2022, right? Who'd have thought we'd see a Russian invasion of Ukraine? Who'd have thought, going back to 2020, that we'd be in the midst of a global pandemic that shut down the economy? Wow. A reminder that things come out of nowhere. And I do wonder, how do you think about that in regards to this year?
Yeah, I mean, I think these things are always unforecastable, aren't they? But what I would say is that today, markets are cheaper than they were this time last year on the eve of the Russian invasion of Ukraine. If we go back to bonds, you've got more yield providing a cushion to returns, and equities are still, 10, 15, 20% off their highs. So I don't see as much downside, and I don't know what the big shock will be this year, but we've had the war, we've had the invasion, we've had 400 basis points of Fed tightening. Hopefully we won't get those things again. So I'm hoping for a more boring year where you can get decent returns.
And boring and decent returns, that certainly would be nice, I think, to a lot of people.
Right?
The S&P 500 is at 3977 right now. Earlier on our program, our colleague on TV, Romaine Bostic, mentioned that it was close to its 200-day moving average. It's certainly an important technical level. To you, looking out across the, at least this cycle, do you think we've seen the bottom in this cycle?
I tend to think we have, yeah. I think, a lot of the derating last year was because yields were going up, and particularly real yields. They seem to have peaked now. We've had the uncertainty about how much the Fed will need to tighten. That seems to be clearing up a bit. We know there's going to be a growth slowdown. I think that the swing factor at the moment is the earnings numbers and how they're going to look over the next several quarters. But to me, it would take some really, really bad news for us to test last year's lows.
I want to go back to fixed income because you say, Chris, that fixed income really stands to benefit most when inflation and interest rates peak. And it does feel like we're going to get to it, whether it's this year or maybe at least the thinking is that the Fed is coming near an end, and maybe global central banks are as well. So what's the fixed income play? Is it sovereign debt? Is it corporate debt? What is it?
I think the sweet spot is investment grade credit, and actually it's the short end of the curve. It's the short maturities, because the yield curve is inverted. So you're getting higher yields at the short end of the market than you are in the 5, 10 or 15-year sectors. So why take on that additional maturity risk when you can get nice yields today? So investment grade looks good. We're quite positive on the fundamentals for credit. And if you're feeling really optimistic, go into high yield where you can get 6, 7, 8% yield without taking too much duration risk. And I think given where we are in the cycle, that's a very attractive proposition.
Any companies, sectors in particular, or any regions of the world when it comes to corporate?
Well, we like dollar debt, we like US dollar denominated debt, and that extends to things like emerging market hard currency debt as well. We're already seeing, I think, some signs where the fundamentals are improving. And we've already had quite a bit of issuance this year so far. Saudi Arabia came with a big deal. Israel came with a big deal. US rates are peaking. The dollar seems to have peaked. These are all good signs for emerging markets.
What about Europe, closer to home? How does the year look? I mean, we spent a lot of last year talking about concerns that we could hit a recession, and Carol, you mentioned it, but Stephanie Flanders essentially saying that, recession in Europe might be more shallow than many people thought. It's pretty interesting to hear this, Chris.
Although UK, she wasn't so sure about.
Exactly. Do you see opportunities there, Chris, as a result of the continued strength that we're seeing?
Well, I think the big issue for Europe was the energy situation and the turning off of the Russian supplies of gas, and they seem to have dealt with it pretty well. We're having a relatively mild winter so far, so.
But how about those energy prices that you're paying for what you are paying for heat?
They're coming down, and eventually they'll come down for the consumer as well. China reopening is actually pretty good for Europe as well, because a lot of the industrial goods will get a boost from when China starts to demand more imports again. And I see more opportunity on the equity side, really, than on the fixed income side in Europe, because equity markets here got smashed last year. They were trading on, below 10 times this year's expected earnings. And if things aren't going to play out quite as badly as thought a few months ago, then there's certainly some significant upside for equities. It's more of a value cyclical play, but in contrast to the US market, which remains dominated by tech, I think Europe has got some upside on the equities side.
Well, Chris, really appreciate getting some time with you today. Chris Igo, he's Chief Investment Officer at AXA Investment Managers, joining us via Zoom from London on this Thursday. Just got about 11 minutes left in today's trading session. We're seeing equities come off their best levels of the session. They've definitely paired some of those gains that we were seeing just about an hour or two ago. So that is definitely playing out. And then, of course, you've got the Treasury curve, and we've definitely seen yields come in. Right now, that 10-year with a yield of 3.43, that 2-year note with a yield of 4.13. Carol Massar, Tim Stenovic, this is Bloomberg Radio.
It is now 3:53 on Wall Street. I'm Doug Krisner, Bloomberg World Headquarters in New York, with a look at some of today's company headlines. Google and NVIDIA have expressed concern to the FTC about Microsoft's acquisition of Activision Blizzard. We are told the companies joined Sony Group in raising concerns with this transaction. You may remember that back in December, the FTC sued to block the deal, which is valued at around $69 billion. Activist investor Nelson Peltz nominated himself to the board of Disney, and his firm Trian Partners filed a preliminary proxy statement this morning urging shareholders to support his nomination. Now, this will set the stage for what could become a highly public debate over the leadership of CEO Bob Iger. American Airlines saying today that fourth quarter profit and revenue exceeded expectations, helped by robust holiday travel demand. American shares up nearly 10% as we approach the closing bell. By the way, Delta Airlines will report tomorrow before the market opens. Shares in Cognizant are rallying. This is after the IT services company upwardly revised its forecast for profit and revenue. Cognizant also naming Ravi Kumar, a veteran of Infosys, as its new CEO. And T-Mobile US is considering an acquisition of Mint Mobile. Mint is the budget wireless provider backed by actor Ryan Reynolds. We are told no firm decision has been made at this point in time. Those are some of the company stories we're following at this hour. I'm Doug Krisner. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, just about 4.5 minutes left in today's trading session. Doug, of course, breaking down the numbers there, and I'm continuing to watch the yields because they've really backed off a bit following that CPI print that was as expected. If you take a look at the median forecast, and I think the good side was that it didn't trend higher. And we know we're definitely off our highs when it comes to inflation overall. But, a lot of investors and a lot of, I'm assuming the Fed would like to see it move down even more quickly.
Yeah, some prices aren't moving down.
What's that?
Include eggs. And those have serious consequences, not just for people who buy eggs and eat them, but also for products that eggs end up going in, like mayonnaise.
This story is a fun one.
This is by Tracy Alloway of the Odd Lots podcast.
She says the troubles for mayonnaise are spreading. So
that's a good lead. That's a good lead. You get it, right?
Yeah, I get it. I get it.
It's a spread.
Well, what's interesting? Yes, got it. Right. Thank you. Duly noted. Mayo inflation, as measured by the CPI category of quote other fats and oils, including peanut butter, jumped to a stunning 18.2% year on year. That's at odds with overall CPI, which, as you know, fell 0.1% on a month-by-month basis in December. The annualized inflation rate now running at 5.7%. But if inflation still expensive.
The primary ingredients of mayonnaise are soybean oil and eggs.
My heart just like.
Because of what soybean oil and eggs do to the heart?
Yeah.
Okay.
It's a lot of stuff.
That is.
Soybeans, man, we know the pricing has been all over the place since the beginning of the pandemic in early 2020. It's unpredictable weather, outbreak of African swine fever in China. They destroyed as much as a third of the country's pig supply. I mean, there's been a lot of stuff going on.
Can we talk real estate? And well, not just real estate, but also
this.
What's going on in here in New York City.
We
talked about the real estate that Ken Griffin is investing in for a new Citadel Tower here.
Mm-hmm.
He told New York City Mayor Eric Adams and other business leaders that public safety is the top priority and that the city can't be attractive to companies if crime is an issue.
Yeah, kind of interesting. And we've talked a lot about this. People have seen it, certainly on the subways. It's been a little tricky. And I know the mayor of New York City is trying to get a handle on it. But, apparently Mr. Griffin and a bunch of other business leaders attending a roundtable with the mayor to discuss issues facing New York. Pretty cool city, no doubt about it. All right, folks, read more. Just head to Bloomberg.com. And right now, you're going to get more on the trade. We're going to count you down to the closing bell because Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are about 2 minutes away from the end of the trading day. Romaine Bostic, Katie Greifeld, We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast. Carol Master, Tim Stenovic stepping up here. We welcome our audiences across Bloomberg Television, Radio, Quick Take, as well as on YouTube. A soft CPI report this morning, Carol, that seems to be the catalyst here for what is a pretty decent rally. We should point out, we keep talking about the S&P. It's up about 0.3%. The cyclical stocks are having a great day. In fact, the Russell 2000 up almost 2%.
And I was so afraid you were going to steal my thunder there, Romay, because take a look at
Chinese?
No.
No? Oh.
How's that? I'm going to do something different. Bitcoin, it is up 8.6%. 18.
Whoa.
I know. $18,895. I mean, it just feels like investors are willing to, kind of bid up a lot of things right now.
Is that a bargain? I don't know.
You know what it must be? You know what it is, guys?
The DCF
crypto
analysis?
crisis is over. Tim and Katie can come back and do their crypto show.
Oh, thank you, Carol.
That's my gift to you guys.
Thank you. I appreciate it.
Welcome.
I mean, there is certainly something in the sentiment today.
Did you see that story?
Yeah, Shonali came on. Yeah, Shonali came on our program and talked about it.
Yeah.
Yeah, it was a really good story.
Yeah, a little violent.
Didn't he get a tattoo or something?
He did. Luna.
I don't think he likes to talk about that. I think that project ended pretty badly.
Well, he did make the point, and Shonali made this point on our air too, that when people like to talk about what they're buying, but they don't like to talk about what they're selling. And oftentimes it's only revealed when it comes to filings. And certainly in the case, he was able to get out of some of those collapsing tokens earlier rather than later. But still, the damage has been done.
Does he make that tattoo into something else?
Good question. That's a follow-up story.
Yeah.
Yeah, I mean, what can you make it into here? Anyway, look, guys, the rally that we had, and look, this has been a sustained rally over the last 2 days here. Modest gains on a day-to-day basis, but I think a lot of folks will take it. The Dow Jones Industrial Average going to finish higher by about 0.6% here on the day, while the NASDAQ Composite is higher by about 0.6% as well. As far as the S&P 500, I was keeping a close eye on this, that retest of the 200-day moving average, which sits right about 39.84 and change. The S&P 500 is going to close just shy of that by about a point, 39.83, higher by about 13.5 points, or about 0.3% here on the day. And I think a lot of people are really waiting to see if the S&P can cross above that 200-day threshold, and more importantly, hold on to it. The Russell 2000 also moving higher. In fact, that was your outperformer on the day, Carol, up 1.7%.
All right, good to know, Romaine. I'm going to dig a little bit deeper into the S&P 500. I feel like there was a little bit more of a bullish tone earlier in the session, or maybe just a couple of hours ago. But Katie, if I look at the S&P 500, you've got 280 names showing some gains today, 221 lower, 2 unchanged.
And it's a similar mixed bag if you look at the industry groups as well. You still have a lot of green. If you look up top, it's the energy names. Of course, crude is higher today. You also have chips doing well. They've been on a really nice run lately. Real estate also in the green by over 1%. You look at what's not doing too well all the way down at the bottom. It's food and beverages, it's utilities, it's staples, sort of leading the pack of the losers as more of those cyclical names really take charge, Carol.
All right, let's get to some of the specific gainers. It's a name that we talked about a lot after the closing bell because there was a bunch of headlines yesterday. We're talking about Disney shares finishing off their highs of the day, but still with a 3.6% gain. We know what's coming out. We've talked about this throughout the day here on Bloomberg. The company electing an independent director, Mark Parker, as a chairman of the board. But it's also really about this proxy war with activist investor Nelson Peltz. He wants a board seat. There's a lot going on. Bob Iger making some changes. So it's one we're going to continue to watch, but investors seeming to be excited to some extent about this name again. American Airlines, Tim talked about it earlier. This was a standout group, certainly in today's session. And this is what happens when American comes out, pre-announces, and they are very, very upbeat. AAL up just off its highs of the day, up about 9.7%. Number one in the S&P 500. UAL, United, was number two. Very upbeat, topping expectations for fourth quarter quarterly profit and revenues. Very, very upbeat. And I've got one more for you. This was top in the S&P and NASDAQ 100. Cognizant Technology Solutions up just shy of 6%. What?
Yeah, sorry, I didn't mean to cut you off. I just want to add one quickly here, too, because we're flashing it on the screen below you for the television audience. No, Bed Bath & Beyond, closing up about 50% here on the day. And, of course, that adds to the 70% gain from yesterday. But I was taking a look at this. $5.24. That's the closing price. That's actually almost double where we were before we got that going concern statement back at the beginning of the year here when it was trading at about 250. So this isn't just bidding this stock back up to where it was. It's really gone back above and beyond it. Now at the highest levels going back to October. Not sure why, but there you go.
Oh, that's too bad. I was actually just going to ask you to explain it because it seems kind of meme stocky.
Well,
yes.
More
Think about the day. You got Carvana up 46, 47%.
Bitcoin.
Marathon
Look at the
Digital.
short
Bed Bath &
positions on
Beyond.
these guys.
Exactly. Look at the short interest.
Yeah.
It's 50% of the float.
Right.
That's a target for some of the those,
And as soon as it starts to go up, right, everybody starts just chasing it.
Yeah, I mean, it's a feedback loop when you have to cover those shorts. So there's some explanation there.
What's old is new again, I guess. Let's get to some of the decliners on the day today, starting with Hewlett-Packard Enterprise. Among the decliners on the S&P 500 today, down 3.4%. This after the company said it was acquiring the software startup Pachyderm. Details of the deal were not disclosed, but the company is going to accelerate AI time to market with lower processing and operating costs with this acquisition. KB Home also falling today, down 2.9%. Its fourth quarter results showed a drop in new home orders. They reported fewer than 700 new orders for the quarter. That's an 80% drop from the year before. And then Logitech, look at this, down 17% today. The company cut its non-GAAP operating income guidance for the full year. It missed the average analyst estimate. Analysts now saying the end markets are continuing to weaken, and this may not prove to be the clearing event that investors had actually hoped for. Shares down 17% today.
All right, and some of the individual stock movers, and you take a look at what happened in the yield space, and it was a pretty swift reaction here. The entire yield curve shifting lower here on U.S. Treasuries here, 4.12% right now on a 2-year yield. That's down almost 10 basis points here. Similar story for your 10, your 20, and your 30-year yield, 11 to 12 basis points lower, as now the repricing really starts to pick up steam in the bond market. And I guess that sets up a little bit of a showdown here for a Fed that still seems persistent on the idea that it's going to 5.1%, and may actually stay there, whether the bond market is willing to call that bluff, that they may actually have to reverse course sometime soon, remains to be seen.
And you think about the read-through, two financial conditions, really a hot topic, at least in my world. You've seen this incredible easing over the past 3 months.
What is your world? Is your world different than our world?
It's cross-asset, it's bonds, it's crypto, it's financial conditions. And when you think about financial conditions, this is the mechanism
Beanie Babies.
through
Oh,
which,
shoot, that's going too far
not
back.
Beanie Babies,
All right,
but
sorry.
this is how actually tightening monetary policy touches the real economy. When you think about the wealth effect, when you think about funding costs for companies. So this theoretically will be a problem for the Fed. They've said as much. No one, it seems, is paying attention, but...
Yeah, the other thing I'm looking at a lot too is the dollar. Dollar index down about 1% in today's session. We've seen, certainly the dollar pull off its highs, and that's going to play out too into certainly global corporate profits. And it'll be interesting to see what kind of commentary we get from CEOs about maybe the impact that might have on their outlooks going forward.
I think investors are still breathing a sigh of relief that Jay Powell earlier this week in Europe didn't really hammer home the idea of interest rates staying high and for a long period of time and bringing inflation under control, because that's something that he had continued to do. And he didn't come out and squash this rally.
Yeah, squash this rally. Well, this sets us up here because, look, now I think we've kind of gotten some of the more important economic data. We're going to refocus, I think, on earnings. In fact, right now, crossing the Bloomberg terminal, I know a smaller company here, Virgin Galactic, the share is moving higher in after-hours trading. The company finally saying that commercial space service that they've been trying to launch, that is on track for a Q2 launch here. So something to keep an eye on here. We're also getting, right now, preliminary data coming out of Lending Club, and interesting that they're actually reducing their workforce by 14% and seeing a pre-tax charge there of about 5.7% here. So this is really going to be kind of the narrative, I think, going forward for the next couple of weeks. It's going to be much more about what we hear out of these companies, good or bad.
Yeah, we did just talk to Chris Igo over at AXA Investment Managers. He said, Katie, that when the only kind of like shoe to drop out there could be what companies say when it comes to earnings. But other than that, he thinks like really the worst is behind us, and we've gotten most of the bad news out of the way.
Famous last words.
I know, that's a good point.
We'll say that, and I mean, earnings is a huge, huge wild card. So, I mean, I guess we kick off officially tomorrow, even though it never ends.
Well, our market guest also said he liked the fixed income market maybe a little bit more than equities potentially, and to really look at something we talked about earlier. You have to, at this point, with yields moving up.
You said bonds are back.
Yields are a lot more competitive.
Well, what do you make of this, though? Because not only you talk about outperformance on bonds, but pretty much every other asset class is kind of outperforming equities, even U.S. equities, I should point out, because, of course, we know foreign equities are outperforming the U.S. as well. But I think it's kind of interesting that is the relative laggard, even though you do have gains here, at least over the last 3 to 4 weeks.
It will be interesting. And then you think about cash, too, one of the best performers last year. When you think about a Fed funds rate, if it gets up to 5%, that seems pretty good. If you
You
just
know what
sit
I
in
learned
T-bills.
today, Tim?
What did you
know
learn?
that Katie has never had seafood?
I've had it before.
I did not.
I just
Did not
don't
know
like
that.
it.
Oh, you've had it.
Things that come from the sea, I don't know.
Yeah, she's afraid of the water.
Yuck.
Other than that, we really love you, Katie.
Thank you.
Okay, you're welcome.
I like being here.
We like having you here. All right, that's a wrap for our cross-platform coverage on radio, on TV, on YouTube, on Bloomberg Quick Take. We did count you down to the close on this Thursday.
You have been counted down.
You're done. Drop the mic. We'll see you again, same time, same place tomorrow.
Nice work if you can get it, and if you get it, won't you tell me how?
Love me some Ella. I saw her in concert
Some
many
great
years
music
ago.
lately.
She is incredible. Thank you, Paul Brennan, for that. All right, so it's been a while. In fact, the last time we talked with our next guest about his company, the world was in the thick of the pandemic. It's a very different environment today, yet one with, as you know, as you heard from our Stephanie Flanders earlier, with a lot of concerns out there. But the company we're talking about is Box. It's a $4.2 billion market cap company, gained nearly 19% last year.
Wait,
we saw
what?
some rally
Gained
today.
last year?
Yep, it was an outperformer.
Oh, wow. I
It
didn't know.
maybe it's a bug on the chart.
I didn't know there were any of those.
The voice you hear is Aaron Levy. He's co-founder and CEO at the online storage and document management software company Box. He's in our interactive broker studio. Welcome, welcome. How are you?
Good. You got good to be here actually in person. So good to see you, and yeah, thanks for having me.
How's the world changed since when we talked in 2020?
The world has certainly changed, quite a bit. It's actually interesting reflecting on being in New York versus the Bay Area. I do think that it's a little bit of a tale of two cities in terms of actually, kind of how much is back in both environments.
We're back here more?
Maybe by about an order of magnitude.
Wow.
So, yeah,
okay.
so it's definitely different environments, but we are seeing this across our customer base of companies coming back, returning to offices, sort of, establishing new work patterns. And it's definitely going to be different than pre-pandemic, but it's certainly equally going to be more different than during the peak of the pandemic as well.
What makes you say that? Just walking down the street, seeing the subways. What's going on?
I mean, every office building I've been in this week has been, fairly packed and maybe a little bit more muted than pre-pandemic. But if you compare that to, sort of the Bay Area and California, it's definitely still pretty different.
Okay, what's interesting about this, though, is that we heard this week that Bob Iger, and this is not a Silicon Valley company by any means, but he wants people to come back to Disney 4 days a week.
Yep.
And Carol and I have talked about this quite a bit, that, as the economy weakens and the workers not in as much control, we could start to see more and more people coming back. What are you seeing with your data at Box in terms of where people are accessing the product? Are they increasingly accessing it at home permanently, do you think?
Yeah, I think absolutely down from the pandemic peak in terms of work from home. I do think companies are sort of all trying to figure out what are their rituals in terms of how people work and where they work from. Bob Iger at Disney, Tim Cook at Apple, what we just saw from Howard Schultz at Starbucks, pushing down, some of these sort of 3 or 4 day policies, I think, is sort of just now the tip of the iceberg of what might, come next across Fortune 500 companies and more generally. But I do think no matter what, some version of hybrid work, some version of more distributed work, some version of more flexibility is here to stay.
Right.
And what that all is going to point to is the need for digital technologies and cloud to be able to actually mediate how people work from any device or any location that they're working from. So we kind of are sort of fine with any outcome, whether everything's fully remote or partially back to the office or fully back to the office.
It doesn't matter for you what the mix is, does it, in terms of your business growth?
No. In all cases, you're going to be creating more digital content than ever before, and there's an explosion of video content, there's an explosion of written content as a result of companies getting more distributed, more collaborative, working in new ways. So in our case, these all point to long-term tailwinds because of just the massive digitization of our business processes and the way that we work. So we're sort of independent of whatever outcome happens, but ultimately what we're really focused on is helping customers collaborate in new ways.
Aaron, you talk big, broad, and we do too, but
Sure.
remind our audience exactly, get down to the nitty gritty, what you do for a company.
Yeah, so Box works with over 100,000 companies, and we have a platform that helps them securely manage their most important data. So their contracts, their financial documents, their presentations, their media content. We help you store it, share it, secure it, collaborate on that data. from any device, anywhere. So it's a cloud platform that powers how you work with your information.
Bulk still small, mid, large? Who is it? What's the mix?
All size organizations. The majority of the revenue comes from large enterprises. So we tend to sort of be weighted toward the Fortune 500 type organizations, but we support businesses of all sizes with over 100,000 customers.
Based on what you're seeing, sorry, I'm on a rapid fire.
fine.
I'll let you in. Based on what you're seeing, recession, no recession, globally, U.S., what are you seeing?
I
Come
think,
on, these guys have to order. They have to work with you. They've got to say, hey, this is what we're thinking. Your team.
I'm the last person that should decide the definition of a recession, but
I'm not asking, but you know trends.
I think there's clearly a muting of some degree of a muted kind of aspect of just sheer kind of corporate growth that does tie into IT spend. And can push down IT budgets. Fortunately, we're in a position where we can help customers save money and drive up productivity and improve their security. So
because we do see when people, like I was just looking at LendingTree, they cut workers and the stock like initially bopped went higher. So I do understand this idea of technology helping a company.
Yeah, so technology will help companies get more efficient, but we obviously want there to be a very robust environment for companies to grow. And I think there is a muting a little bit of the consumer economy. Certainly in some of the consumer tech companies, advertising dollars are lessening a little bit. But our job is just to help companies, no matter where they are in that continuum, to get more efficient, be more productive, stay more secure.
Okay, something weird is happening here because most software stocks just got crushed last year. You guys were up 19%.
Yeah,
you're in fact close to record highs. Right now.
Yeah.
How? Well, this is a high interest rate environment. What's going on?
It's a really rough environment for anything connected with the cloud.
Yeah, it is a rough environment, particularly if you are a high growth company where your stock was largely bolstered by your growth rate and that with kind of higher interest rates, the valuation of those companies have come down naturally. It's an interesting, almost bittersweet dynamic. So we never really had an inflated valuation. So that meant there was sort of less room to come down. At the same time, we've been working pretty, significantly on improving our profit margin in the past 3 years. So
how do you do that?
Just hyper focus on efficiency across the business.
Cutting workers?
Actually, not really about cutting, but you can kind of grow into your headcount in a lot of cases, largely by just remaining extremely focused on the areas that are working in the business. So doubling down in sort of the products that are generating the greatest returns as opposed to diluting your bets. Doubling down in the regions that are most productive. And so our case by region, I mean, where are the most sort of the largest IT spending markets and not diluting our focus from a regional standpoint, getting really, really focused on gross margin and the efficiency of our platform. So starting about 3 years ago, we kind of had a bunch of work streams across the business to get more efficient. And, fast forward to today, that's actually in vogue, but it wasn't at the time. And so we never got that inflated valuation. But as valuations came down, I think across the sector, ours by comparison was holding up, pretty nicely.
I want to ask you about something because this week RBC was out with some research.
Yeah.
They anticipate the 2023 year will be kind of two halves for U.S. software stocks. And they talked about kind of overall what they see, but they did cut Box to underperform.
Yeah.
They cut the price target to 24 from 28. They're concerned about the sustainability of your turnaround, particularly if Japan growth slows. Your stock was down about 6% on that call. Can you address it? And they did also talk a lot about the Japanese market, which has been good for you.
Yeah, so we've seen tremendous growth in Japan. We kind of got sort of the right place, right time at the beginning of a kind of a SaaS or cloud super cycle about nearly 10 years ago. So we had all the right partners, we had a great team on the ground, and we rode this wave of large companies adopting SaaS. And so that's actually been a very strong tailwind to our business. Almost by definition, as that business gets larger, the growth rate will come down. So that was in the sort of note. It's actually something that we already anticipate and is sort of built into our general model.
Right.
But overall, we obviously care about the health of the global business. Even if the Japan growth rate comes down, our job is to make sure that we manage that at a global level.
Before we let you go,
sure.
We got 40 seconds.
Okay.
You're huge on Twitter, 2.4 million followers.
Yes.
Obviously, you've been following what Elon Musk has been doing closely.
Can you tweet us out, please? No.
What are your thoughts on what Elon Musk has done to the platform?
So I'm always a fan of kind of moving fast, innovating quickly, and so some of the changes have been exciting to see. Some changes maybe I don't agree with as much. In general, I think that the platform should stay very, very focused on getting to a global population of consumers. I think maybe less focus on the paid subscription product, more focus on more features at the free level.
Is it still useful to you?
Yeah, absolutely. I mean, it's
just as useful as it was?
Indispensable.
Okay. There it is.
Cool.
Your timeline is not messed up.
Come
Like my timeline
back.
is just destroyed.
That was too short.
Have you swiped?
I got a swipe.
Okay.
All right. You can show me. Everyone's telling me
working
to
on
change
it.
my timeline.
Okay.
It's a
You got to change your
disaster
timeline.
right now.
Well, I'll give you some hints.
All right. Thanks.
Good luck this year.
Thank you.
Come back and talk. Let
Okay,
us know how
appreciate
things
it.
are going. Really
Okay.
appreciate it. Aaron Levy, he is co-founder, chief executive officer of Box, joining us in our Interactive Brokers studio. Carol Master, Tim Stedovic. This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Well, stocks and bonds pushed higher today on the bet for a slower pace of those Fed rate hikes. All of this after retail inflation cooled in the month of December, with CPI down by 0.1% from November. That was pretty much in line with forecasts. Cheaper energy prices contributing to the first drop in 2.5 years. And then if you look at the earnings story, American Airlines rallying 9.7% today after reporting fourth quarter profit and revenue above forecast, helped in large part by a robust holiday travel demand. We'll hear from Delta before the opening bell tomorrow morning. Also tomorrow, the big banks will report. That includes JP Morgan, Citi, and Wells Fargo. Today, Dow Industrial Average picking up about 0.6%. In the broader market, it was really a move higher in energy stocks that led the S&P to a gain of around 0.3%. NASDAQ comp rising 0.6%. Shares in Disney rallied today by about 3.6%. The activist investor Nelson Peltz has nominated himself to the board at Disney, and his firm Trian Partners has filed a preliminary proxy statement urging shareholders to support his nomination. I'm Doug Krisner. That is your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Really appreciate it. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds to apply for a payroll tax refund if your small or medium-sized business was impacted by COVID-19. Innovation Refunds clients already claimed over $2 billion in payroll tax refunds. Get started at getrefunds.com.
All right, last fall, you might recall David Rubenstein. He, of course, hosts the David Rubenstein Show, peer-to-peer conversations on Bloomberg. He interviewed U.S. Surgeon General Dr. Vivek Murthy, and David asked him what the biggest health challenge facing the U.S. was. He didn't answer with COVID or obesity or heart disease or cancer. Nope. Instead, he said it was the mental health crisis in our country, Tim.
Yeah, Dr. Murthy said that it impacts our physical health, how we work, our productivity, so it's important on really every level. Let's talk about that with Robert C. Garrett. He's the CEO of Hackensack Meridian Health. It's a not-for-profit healthcare group. It's based in New Jersey. They've got 17 hospitals, including 2 children's hospitals, some community hospitals, and then a behavioral health hospital as well. He's with us in the Bloomberg Interactive Brokers studio. It's good to have you with us. How are you?
I'm doing great. Thanks for having me, Tim and Carol. Great to be back.
It's great to have you.
Well, give us an update on what's happening in the hospitals right now, because you walked in here just a few moments ago and you said we're still treating COVID patients.
Yeah, we still are. We've actually treated since the beginning of the pandemic almost 100,000 COVID patients, which is really incredible when you think of it. On the good news front, we're not at any peak. We saw a little bit of a spike after the holidays, but we're at about treating right now about 450 COVID patients throughout our health system. Contrast that to March and April of 2020 when we were well over 3,000. So it's at a much more manageable level. But it's a relentless virus. It has not gone away. And unfortunately, we're still seeing people that are getting sick, that are in our ICUs, that are on ventilators. Just not to the extent that we've seen it before. We've also vaccinated 900,000 people since the beginning of the pandemic. So it's a lot. And we still encourage folks to come in and get vaccinated.
Bob, those that are in the hospitals, older, not vaccinated?
Yeah, mostly older, not vaccinated. Some younger people who have underlying conditions. Maybe some of them haven't been vaccinated, but there's definitely a difference between those that have been vaccinated and those that haven't. Mostly the ones that are the sickest, if you will, the most intense right now are the ones that are unvaccinated.
When you think about kind of 2023, you're getting ready to head to Davos, and that's where there's a big, kind of macro think. What's top of mind for you?
So what's top of mind for me is really the issue of health equity. I think about our mission at Hackensack Meridian. It's to transform healthcare, but how can we do that unless we make healthcare more equitable? And behavioral health comes into that as well as you guys were leading into the segment. And
what is a behavioral health hospital?
Well, it's a hospital that treats people that have various mental illnesses.
And devoted completely to?
Devoted completely to that. So we merged with Carrier Clinic, which is New Jersey's largest behavioral health care hospital before the pandemic, about 3 years ago. And what we realized and why we did the merger with Carrier is we realized that we weren't really doing a great job in providing mental health services and behavioral health care services in a coordinated way, and we needed a partner that really had great experience, and they did. And as a result of that merger, we've really been able to expand our services and programs greatly in a matter of 3 years.
How much of that is because we came out of the pandemic? And I just feel like I've had much more very openly mental health conversations or mental wellness conversations, not just in my world privately or in my world at work, but on air.
There's no doubt that the pandemic exacerbated the problem significantly. Prior to the pandemic, I think the statistic was there were like 1 in 5 or 1 in 6 Americans who had some sort of mental health disorder or significant behavioral health issue. The latest statistic that we've seen is it's 1 in 4 now, and possibly the next set of data that might come out might show it's 1 in 3. So it's really, the pandemic has definitely exacerbated it, and we're seeing it. We're seeing it in our workforce. The folks, and I have to give a shout out to the folks that have been on the front lines of COVID since the very beginning. The doctors, the nurses, the support people. They've just been true American heroes in every sense of that word. But they've been burnt out, and resilience is a big issue. And we've paid a lot of focus and attention to workplace mental health programs.
I'm curious about Davos and sort of the business case for the CEO of a nonprofit hospital going. Just give us. It probably could be a tough justification. I mean, you have to get this stuff approved, but what's the business case? Because when you think about Davos, you often think about the bankers who are there, policymakers, outside of the United States. Some U.S. policymakers are there as well. But what's the selling point for you?
For us, because our mission is to transform healthcare, I believe it's important that we participate in forums like Davos. And there's definitely a big linkage between health and wellness and healthy economies and healthy countries, and there's a lot of data to support that. And the message that I'm coming in with is that we really need to tackle health equity. It should never be determined by your zip code or who you are. But it is. And there are still issues in access to care and, unfortunately, disparities in healthcare outcomes. So one of the things we're focused on is what we call the social determinants of health, because 80% of staying healthy is not about the treatment that you're going to get from your doctor's office or your hospital or whatnot. 80% is, social, economic types of factors. Right. And so one of the things that we're doing, and I'm really proud of this, because a lot of folks are talking about health equity and the social determinants, but we are screening everybody that comes in contact with a Hackensack Meridian site. You mentioned we have 17 hospitals, 18 actually now, and we have 500 different locations. We have screened, in the matter of less than 18 months, we've screened over 550,000 individuals who might be at high risk for one or more of those social determinants of health. That could be unstable housing. It could be that they don't have transportation going to and from doctors' offices. It could be that they have a behavioral health issue that needs treated.
What do you mean screen? Tell me, is it incoming patients?
So they're incoming patients,
Okay.
and there's a screening tool. We use a digital platform called Unite Us. And we'd be able to, so the registration folks ask these questions, clinicians ask these questions, and if certain criteria are met in the screening process, they are then referred for help. And we have made 1.7 million referrals, to social agencies, to community organizations, maybe to hospital resources, to Hackensack Meridian Health. So I think you have to put programs in that are very specific like that. If you're really going to tackle health equity, you really need to get at the fundamental root. And the fundamental root is that 80% of the reason why people are not receiving equitable health care is these socioeconomic factors.
You can only do so much as the CEO of a hospital system. So if you could wave a magic wand to create one policy here in the U.S. that you think would create more equitable care, what would it be?
Well, I would, and that's one of the reasons I'm going to Davos too. We are only one hospital, but we have we'll have a big audience there in Davos to talk about some of our success. I think that the magic wand would be that the government and the private payers, the private insurance companies, need to make mental health treatment equitable. They need to. It has to have parity with how they reimburse for medical care. And I think there needs to be a national dialogue and a national policy around health equity, because it's going to benefit all Americans. It's not going to just benefit those that haven't received the right care or the right access to care. It will benefit everybody. I believe all boats will rise.
I also feel like just like you get your regular physical every year, like there's got to be a mental wellness component to it. Just quickly, we've only got about 40 seconds. You are proposing a 4-day work week? Do you think that's a good idea? Is that
I do.
correct?
I do think it's a good idea. I think there are.
Are you proposing it for your workers?
I support you for president.
Yes, for our we're going to look at that for our workers. It's tough for healthcare, right?
Yes. Yes.
Well, yeah. Well, we could talk to the Bloomberg people. Yeah. but I think it's going to be. I think flexible work will really enhance workplace mental health. So it is important for us. We're also a proponent of it for other organizations as well. We're out there in schools and businesses as well.
Well, come back and tell us how that's going. And,
Absolutely.
Are our bosses listening?
Yeah, I hope so.
I had a job that was 4 days a week. It was sweet.
We just got to get markets to be only open 4 days a week, and then we'd be in the clear.
Am I getting a call from your boss later?
You might. Get ready. Bob Garrett, safe travels as you head to Davos. Bob Garrett, he's the Chief Executive Officer of Hackensack Meridian Health here in our Bloomberg Interactive Broker Studio. I know the hospital system well. I've been to Hackensack many times for myself as well as my family, so very well voiced in the work that they are doing. All right, you're listening and watching Bloomberg Business Week.
Let's get a check on world and national news. For that, we turn to Nancy Lyons in the 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Attorney General Merrick Garland says he's appointing a special counsel to oversee the investigation into President Biden's handling of classified documents following his tenure as vice president. Robert Hur is taking on the role after serving as U.S. Attorney for the District of Maryland during the Trump administration.
I am confident that Mr. Hur will carry out his responsibility in an even-handed and urgent manner and in accordance with the highest traditions of this department.
Again, Attorney General Merrick Garland. President Biden addressed the ongoing investigation earlier today while hailing the latest inflation report.
People know I take classified documents and classified materials seriously. I also said we're cooperating fully and completely with the Justice Department's review.
Biden did confirm more documents were found at his home in Delaware, in addition to those found at a think tank office. As for inflation, consumer prices moderated again last month, bolstering hopes inflation's grip on the economy will continue to ease and that the Fed may back off a little in controlling it. New Jersey Governor Phil Murphy says he's making sure residents in his state can bounce back from the pandemic. He tells Bloomberg he's doing what he can to lower their tax burden.
We delivered, I think at this point, 14 or 15 tax cuts already for the middle class, for seniors, for working families, and we're not going to relent, but absolutely no new taxes.
Governor Murphy says he also wants to embrace the new reality and keep workers in New Jersey rather than see them commute into New York City like they did pre-pandemic. He says they're not thrilled with that tax dislocation. Two new studies show 2022 was the warmest La Nina year on record. The reports from NASA and the National Oceanic Atmospheric Administration also found the last 9 years were the hottest ever recorded. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So the day began with a word that retail inflation cooled in the month of December. Speaking here of the Consumer Price Index report, CPI was down last month by 0.1% compared to November. Cheaper energy costs get the credit. They contributed to the first drop in 2.5 years. Now we have equities higher. Yes, we finished a bit off the best level of the day. Energy, though, really leading the S&P to a gain of about, let's call it 0.3%. Crude oil very near $79 the barrel today. A lot of focus here on the China reopening story. For the Dow Industrial Average, a gain of 0.6%. NASDAQ Composite with a similar advance. In terms of the bond market today, long-term interest rates coming down quite a bit. 10-year Treasury last quoted at 3.44 with a loss in yield of about 10 basis points. A lot of earnings to talk about. American Airlines rallying today by 9.7%. Fourth quarter profit and revenue both exceeding expectations. We'll hear from Delta tomorrow before the open, as well as the big banks including JP Morgan, Citi, and Wells Fargo. Activist investor Nelson Peltz nominating himself to the board at Disney. Trian Partners, this is Peltz's firm, filing a preliminary proxy statement this morning urging shareholders to support him. Disney shares today rallied. And a rally today in shares of Bed Bath & Beyond. And now we're hearing that the retailer is speaking with potential lenders to finance the company during its bankruptcy proceeding. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, and we're going to kind of piggyback on what Doug had to say about Disney specifically, because it does feel like the activist investors are starting to, stir the pot a little bit, because as Doug mentioned late yesterday, activist investor Nelson Peltz, we know the story that's out there, nominating himself to the board of Disney. It could become all of this a very highly public debate over CEO Bob Iger's leadership, because Disney also said late Wednesday that Mark Parker, executive chair of Nike, will take over as chairman from Susan Arnold. So they're kind of positioning themselves as well.
Yeah, I mean, I guess you could say a lot of these issues fall under ESG,
Sure.
especially the G part, governance here.
Right.
Something investors are sharpening their thinking about. When it comes to what it really all means, though, we turn always to a Bloomberg Intelligence senior ESG strategist and analyst, Shaheen Contractor. She's with us right now in the Bloomberg Interactive Brokers studio. There's a lot of places we want to go, but want to start with the news. As Carol just mentioned, about Disney, Trian, Nelson Peltz. We heard it from Doug as well. You look at this stuff through an ESG lens. How are you looking at these potential proxy war and how it could play out?
So, Tim, Disney is interesting. What I find the most interesting, as you said, it's, a lot of it is a G issue. What recently happened was that the chairperson, right, Susan Arnold, stepped down. Now, that was because of a term limit. So in terms of G, that's a good thing, right? You want fresh
15
blood.
years, I think, right?
Right. Yeah. So you want fresh blood, but that removes diversity, right? It removes a female from a pretty senior position, that chairperson. I actually saw a number today, 6% of U.S. companies have a female chairperson. I was shocked.
You were shocked that was low or high?
Low.
Low.
Oh, my God.
How much,
6%? 6%. So
I expect that. It's like the numbers are awful.
I know. We've been talking about this forever, and it's
Yeah.
an easy.
But-
It's such an easy metric, right? You can look at a board and say, okay, woman, not woman.
Yeah, I was
Diversity.
shocked. I thought it would be higher than that, I will say. But I think this is one of those classic examples where it's like a good thing, but a bad thing. Like you get one thing and you take away from something else. So it's just an interesting ESG dynamic.
Well, and I was just to be fair, because I don't want to beat them up unfairly so, if I look at their board overall,
It's very diverse.
I was just going to say, it's pretty diverse.
Mary
between
Barra's on there.
Perfectly balanced board. So it's about 50% women
Saffron
right now.
Katz, Amy Chang,
So,
there's a fair amount, right?
So by definition, perfectly balanced.
I don't want to beat them up. Yes.
No, it's fine.
Yeah. I think what's interesting, though, is I do wonder, too, about, the activist investors and the role that they have in ESG. Do you guys have a thought about that? That whether or not activist investors are good for the ESG metrics in terms of providing transparency or really making changes come about, real change?
So activism has been on the rise. When markets go down, it's more so it's more pronounced right now. I think the trend of late has been these activist investors not going only for the traditional, sell your company, sell this,
Bring it
merge and
up.
acquire, go do that. But they're also focusing a lot more on ES issues. And I think that's an interesting trend.
So what do you mean by that?
So like I feel like Apple at some point, I feel like there was an activist investor about their supply chain and things like that.
And Apple's been really proactive about transparency
Yeah.
with their supply chain.
Yeah, so actually I have a better example. So one of the utilities, AES, we had an activist investor that came after them saying they have too much fossil fuel. So that was, and to transition into renewables. And then NextEra had the opposite a few years back. They had an activist investor say, you have too much leverage, sell your renewables.
Yeah.
So it's interesting.
It can play different ways. What about gender diversity specifically, and how does it stack up against race, ethnicity, age, and LGBTQ plus representation, the other diversity areas when it comes to boards?
So it's easy to track gender diversity, right? Because it's clear.
Most times.
Yeah, most times, and in some regions more so than the other. I think with race, ethnicity, it's very hard. What's a minority in the U.S. is different from what's a minority in India, is different from Australia. So it's a very hard thing to wrap your head around. That's why we're seeing, when we think of shareholder resolutions like proxy voting, a lot of what investors are shifting from now is asking for reporting around racial diversity rather than gender diversity, because we need that company information. It's not clear cut. You can't just look at a board and say that's it.
Are there certain rules about reporting this stuff, like especially for publicly traded companies or companies that want to go public? Like the NASDAQ has rules now. I mean, is that coming into play at all?
So in the U.S., I don't think so. I think the EU regulation has a lot more sort of movement there.
Yeah.
What I would say is there are certain kind of gender regulations, like Japan has a new pay gap disclosure regulation where companies have to disclose a pay gap on their boards, or is it the whole company? Sorry, the whole company.
Okay.
And so that's mandated.
I love that you have a conversation with yourself.
Yeah.
It's really sweet. Keep going. I'm just giving you a hard time.
That's good. So Japan, for example, so that's sort of mandated disclosure. For example, they have to report on pay gap. So that's one example. It's not too common.
What do you make? I mean, Tim and I talk about this a lot. Like, there was such a, all-in, buy-in, I feel like, by the financial community when it comes to ESG. It attracted tons of money, and then as the market kind of seemed to came undone, it feels like everybody's starting to pull away a little bit from the love affair with ESG.
Yeah.
I keep saying, and I'm not alone, ESG reckoning. Like, are we getting a reckoning when it comes to what exactly is ESG?
So a little bit.
And more clearly defined metrics so we can really kind of compare companies? No, she says
so.
No with
I
that
think
face.
the controversy. So there's been a lot of ESG controversy, a lot of backlash. I think it's resulted in a little bit of productivity. In which case we're questioning it, we're answering it, we're solving for things. So I think we need some more time to. You have step one is recognize, step two is solve. So hopefully we'll get to step two.
Hey, I want to touch on a newsletter that you recently wrote about the auto industry.
And that wasn't me. That was my colleague. But go on.
Oh, I have it. Automakers, how they're driven by the effects of ESG.
That's my colleague.
Oh, sorry. Can you still speak to it? Okay, so we'll talk about something else. Go ahead, Carol.
But that's good when you talk about it, like industries, and like your team is looking at them specifically. When you look at an industry, like should we assume a renewable energy or alternative energy, Tesla, like I say, I think I already know the answer, like that they're just going to be better on ESG metrics, or at least the E metric?
On the E metric.
Or can we assume?
So you have to. So a company's products don't just make you ESG, right? So you can't assume that Tesla is ESG just because it sells a certain product. It does perform better on that specific issue because it's true. It does have certain opportunities available to them that others don't. But you have to recognize shareholder rights. You have to consider, for example, social things and things like that. So it's a more operational view rather than sort of.
This is why the definition is so tough.
Yeah,
It's like in the eye of the beholder for so many.
Yeah, it is. I think the main thing is if you think of it a certain way, you be transparent about it and you tell, like a fund, right? If a fund thinks of ESG in a certain way, just describe that to us rather than trying to define it. That's the way we see it, because if you try to keep defining ESG exactly, I feel like we're never going to get anywhere.
Well, and I also think like ESG initially was about what risks they posed for the company financially, right? Not necessarily, I think there's been a whole thought that ESG is just companies that do good, like on so many different levels. Anyway, It will continue. Shaheen Contractor, she's environmental, social, and governance analyst with Bloomberg Intelligence here in studio. This is Bloomberg.
It's now 4:53 on Wall Street. I'm Doug Krisner of Bloomberg World Headquarters in New York, checking some of this hour's top company headlines. Google and NVIDIA have expressed concern to the FTC about Microsoft's acquisition of Activision Blizzard. We are told the companies joined Sony Group in raising concerns about this $69 billion transaction. You might recall that back in December, the FTC sued to block this deal. Activist investor Nelson Peltz has nominated himself to the board at Disney, and his firm Triant Partners filed a preliminary proxy statement this morning urging Disney shareholders to support his nomination. Needless to say, this will set the stage for what could become a highly public debate over the leadership of CEO Bob Iger. American Airlines saying today that fourth quarter profit and revenue will exceed expectations, helped by robust holiday travel demand. And then continuing with this theme on corporate earnings, we'll hear from Delta Airlines before the open of the equity market tomorrow. We'll also hear from the big banks, including JP Morgan, Wells Fargo, and Citigroup. Shares in Cognizant rallied today after the IT services company upwardly revised its profit forecast. The company also named Ravi Kumar, a veteran of Infosys, as its new CEO. And T-Mobile US is considering the acquisition of Mint Mobile. Mint is the budget wireless provider backed by actor Ryan Reynolds. That's a look at a few of today's company headlines. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenivek and Carol Masser live in the Bloomberg Interactive Brokers studio. Some breaking news right now. Apple CEO Tim Cook to see pay reduced by over 40% in 2023. Tim Cook to see pay reduced. He was paid a total of $99.4 million in 2022.
All right, so that's a big change, certainly for the head of Apple. All right, we're going to get back to the business front in just a moment. Actually, we're going to speak politics in just a moment. But first up, let's get in on world and national news. Let's do that with Nancy Lyons. She's in D.C. Hey, Nance.
Thanks, Carol. Attorney General Merrick Garland says it is in the public's interest to appoint a special counsel to investigate whether President Biden mishandled classified information during his time in private life.
This appointment underscores for the public the department's commitment to both independence and accountability in particularly sensitive matters, and to making decisions indisputably guided only by the facts and the law.
Garland named Robert Hur to the position. He's a former U.S. attorney from Maryland. President Biden weighed in today ahead of Garland's announcement, confirming additional documents had been found at his Delaware home.
We're cooperating fully and completely with the Justice Department's review.
New House Speaker Kevin McCarthy says there also needs to be a congressional investigation. House Republicans have wasted no time in tackling abortion. Bloomberg's Amy Morris reports on the first set of abortion-related bills.
One resolution condemns any violence to organizations that oppose abortions. Another lays out rules for doctors to treat children born after an attempted abortion. Doctors who perform abortions would be subject to criminal penalties. Neither bill is expected to reach President Biden's desk because they won't make it past the Democratic-controlled Senate. But Republican leaders have promised to pass abortion restrictions this Congress, introducing another bill that would ban abortions after a heartbeat is detected, usually around 6 weeks. In Washington, I'm Amy Morris, Bloomberg Radio.
A Brazilian art collector is alleging one of the 74 Van Gogh paintings on display at the Detroit Institute of the Arts was stolen from him. Gustavo Soder says the 1888 painting, Novel Reader, was stolen after he bought it in 2017 for $3.7 million. He's been searching for it ever since. He says it's now worth $5 million. He wants the courts to force the museum to return it. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
All right, thank you so much, Nancy Lyons. So, as you know, we've been talking about it here at Bloomberg. President Biden's handling of classified documents erupting into a political crisis. I feel like I've seen this movie before. So let's get to our Joe Matthew. He is host of Bloomberg Sound On, coming your way in just a few minutes. All right, Joe, what do we know?
Well, are you guys big on Corvettes? That we heard more about Corvettes today. Oh my God! You know, that was a big selling point during the campaign for him. He loved showing off his 1960s classic Corvette, and sometimes he would take it for a little spin. They put a video out. Now, of course, we're picturing the Corvette with a box of documents under it, because apparently this latest batch, there was a second, and now there's actually a third. Was found in his garage where he keeps the classic Corvette, and he actually made the point today to say, well, hey, you know, it's not like I got my car on the street. That